This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. It is not a normal Wednesday. It is a yield-up Wednesday. The real yield solidly moves higher. And Paul Sweeney, the two-year yield, right out near 5%.
Yeah, I mean, again, why don't I just buy my two-year paper for my government, have no risk, at close to 5% return, Tom? That seems pretty solid return to me. I don't need to go crazy and take credit risk or equity risk. Yeah. I don't know. We'll talk to some experts today, Tom.
Real yield 2.21% as well. Japan yields move up. There's a lot of M&A activity. Kudi Gupta was just telling you about. But a stellar list, and we're going to start strong here. In a few minutes, you're going to listen to Paul Ciana of Bank of America, and his lead chart in his note is a two-year yield above 5%. We'll talk to him about the momentum, the trend that we see in higher yields. Our trend is to be on Apple CarPlay, on Android as well. Good morning across the nation. 20 different nations around the world have Apple CarPlay. Loving what we see there, particularly in fancy new cars. People go and they buy a new car, and they say, I want Apple CarPlay. You know, they want
it's
want
there. It's right there. I mean, it's easy.
I mean,
easy peasy.
Ciana has it in his Bentley, and that's the way it works out. And also on YouTube, subscribe to Bloomberg Podcasts. Search Bloomberg Podcasts. We're out there. I'm not in the live chat yet. Lisa, are you in the live chat yet? No. We are both we're 0 for 2 here. We'll have to get
There we go. I'll get there.
We'll work on that in a moment here. The Interactive Broker Studios with our Bloomberg Business Flash. Lisa Mateo.
You got it. And we have futures falling this morning after resilient consumer confidence data and also hawkish Fed speak. Will that fuel those expectations that interest rates will be higher for longer? Right now we have NASDAQ futures and S&P futures down 0.6%. Dow futures down about 0.5%. To the bond market, the two-year yield 4.96%, down 2 basis points. The yield on the 10-year at 4.56%, and that's up 1 basis point. Today, the Fed releases minutes of its Beige Book economic survey. I know Tom's going through that page by page tomorrow.
That'll be a first.
Initial jobless claims tomorrow, GDP, wholesale inventories. But yes, several, yes. All eyes Friday. This is what Tom's looking at. Friday's April PCE price index. There you go. All right, let's head to the oil industry. A lot of talk there. Could be in store for another major deal. ConocoPhillips in advanced talks to acquire smaller rival Marathon Oil. It's an all-stock deal. Shares of ConocoPhillips down about 0.7%, but Marathon Oil up about 5%. And this news comes after Hess shareholders approved that deal for the company to be bought by Chevron. That agreement, though, being challenged by ExxonMobil. And it could be the end to a $49 billion pursuit by the world's biggest mining company. We're talking about Anglo American. They're saying they're not giving BHP Group any more time to commit to that takeover offer. Anglo American ADR's down nearly 2%. BHP Group up 2%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. And again, to frame it out for you on this Wednesday, it is not a normal Wednesday. Futures negative 33. On level, Dow 38,719, under 5,300 on SPX. The VIX goes to the 12 level, out to 14.09. It's not a secret. I've been listening carefully to Lindsay Piegza. It's Stifel. She frames out a need for a Fed rate increase. So much of that is the animal spirit of the nation, where nominal GDP is, even a sustained real GDP. Mark Zandi, Paul, out on Twitter, talking about a durable economy, a durable consumer. And the end result that we follow, and Paul follows, he's got a terminal at the beach house, and he sits right on the deck.
Yep.
Do you have the little mini terminal on your surfboard?
I do. Oh yeah, of course. Right on the phone, right there. I got the
You can watch it.
Waterproof phone, and we're all set.
You and the Dolphins.
Yep.
Paul Ciana joins us. Had his FICC technical strategy at Bank of America. Paul, you don't mince any words about it. This is a two-year going well above 5%. How does it get there?
Yes, indeed. So base case technical process here says there's something called a rising wedge pattern forming in the medium-term chart of 2-year yields,
Right.
which says this cycle needs to make another marginal new high this year.
What is the bet now in the bond market? Can it be like an NVIDIA where everybody's on board in an equity stock and Luis Yamada would say that we break out of distribution because there's an oomph? Is there an oomph to the bid? Is there an oomph to a lower price, higher yield on 2-year?
I think it's driven by the commodity space. Right?
Really?
The higher commodities
You're
go,
in speaking terms with Francisco Blanche? It's unbelievable. It's
Of course.
breaking news. Commodities are driving the 2-year yield.
Yes, it's the inflation scare, right? The higher commodity prices go, the more markets think about sticky inflation, the risk of the Fed staying on hold for longer,
Oh.
potentially pricing out cuts, the narrative talking about whether or not we get a hike, which is unlikely, but
Yeah. I mean, the interns today, Paul, when I came in, they didn't brief me on Brent. Brent was 83. It's now rounded up $85 a barrel. There's that inflation.
Exactly right. And Tom, I'm looking at Paul's. He's got in his research notes. There's just way too many charts, and I mean, it's just nonstop.
He wrote a book. He couldn't even get into LeCirque across when he was at
He works
Bloomberg.
here, right?
He had to show his ID at LeCirque, and they didn't even believe his ID. And he had a book out on technical analysis. He's like 17 years
Exactly.
old.
So, Paul, what do we do here with this 10-year Treasury? It feels like, I don't know, 450, we kind of feel like we're in a kind of a trading range here. How do you think about the 10-year yield?
we do. You know, our medium-term view here on the 10-year yield is, you know, we're in this first half of 2024, which we define as counter trend to fourth quarter 23. Fourth quarter 23 yields fell. First half of this year, yields up. I think we're nearing the end of that period where we should be looking for tops in the 10-year yield chart or signals that say we peak out by 5% and roll over in the second half of the year.
You take your trend analysis back to John Fitzgerald Kennedy. What do we learn by taking the 10-year trend back to 1962, 63?
That it went up for 15 years and about down for 30.
Wow.
So that doesn't mean it can't go up for 15 years, right? Anything is possible in markets. And what I think changed in 2020 was the downtrend in yields, that secular decline, clearly ended, right? The downtrend channel that everybody loved for so long, from the peak in 1985 down to the 2020 low, it broke. And I think what's even more fantastic from a technical lens is that there was a head and shoulders bottom in the monthly charts of 10-year yields when it did, in fact, change the secular tide. And, you know, to see that happen, it complements the head and shoulders top back in the early 1980s. So these are the same technical patterns, Tom, that are formed by different investors over different generations repeating themselves.
So is this kind of is this kind of the new normal here? You know, we got a 10-year at, 4%, 5%. Is that kind of the new normal here?
I define it as we're now in a secular bear market in treasuries.
Secular bear market.
Overall,
okay.
biggest picture, right? People would say
Right.
the equity markets are in a secular bull, right? In treasuries, we're in a secular bear, which is rising yields for the biggest picture. So this year, they come back down again, but maybe next year or two, they go to higher highs.
If a stock is a moonshot, and we're going to go a little technical here now because Ciana can keep up with this. If you run it semi-log where slope matters, percent change, and even if you take Wells Wilder 1978 and you look at some trend analysis as well, can you chart NVIDIA? I mean, it's outside your remit to give me buy, hold, sell on NVIDIA, right?
True.
Okay. Can you technically chart a moonshot, whether it's copper or NVIDIA?
Absolutely.
Well, what do you see now in a moonshot like NVIDIA?
Well,
Is it contained? Is it
on
in control?
a arithmetic scale,
I'll go. Well, let's
right?
go. Lisa, can
It's
we,
like an L.
Oh, whoa. Too many syllables. Lisa, can we go arithmetic today or logarithmic?
Logarithmic.
There
Yes.
we go.
All right, there
Take
we
it back
go.
to arithmetic. He's a guest.
look, logarithmic scale, it's up and to the right.
Right.
If you look at the dollar since 2008, the dollar's up and to the right.
What's your dollar call?
We're bullish.
Your bullish dollar.
We think the dollar stays supported this quarter. There's potential for a breakout in the Bloomberg dollar index, for example, to another high for the year before there's any risk of it rolling over. Ultimately, the dollar isn't the trade here. It swings 3% either way. It's the currency on the other half.
Right.
So if you want carry, because that's
Brilliant.
your portfolio's...
Oh, what is this, the Sass hour? Only Damien can talk carry here. Paul, I got time for one more question. We have James K. Glassman coming in later, iconic for Dow 36,000. It took a while to get there. Can you frame out a roaring 20s like Ed Yardeni, where we're in an extended bull market?
You know what we can frame out in our equity technical research is that every cycle that we've pretty much looked at for this year is positive. And it does indicate stronger statistics for the summer rally and stronger statistics to year end. So big picture, we do think that equity markets are in the secular bull cycle, not a secular bear. So yes, it is supportive of that narrative.
Okay. Yeah, that worked out okay.
Yeah, he knows what he's talking about.
You know, he knows where the food court is. Paul Ciana, ex-Bloomberg, now holding court at Bank of America, doing a great job there. And I really can't say enough about his book. It is not dated. It is a brilliant book, a little dense there, a pro book on technicals as well. Futures, negative 38. Right now, with a logarithmic news report, Michael Barr.
Thank you very much, Tom, Paul, and Lisa. After more than 6 weeks of proceedings and a marathon day of closing arguments, Donald Trump's hush money case, the first ever criminal trial of a former president, is about to go to the jury. Greg Valliere, chief U.S. policy strategist at AGF Investments, does not expect a speedy verdict.
Everyone has a forecast, and I do too. Mine is that this is going to drag on for quite some time, with maybe a juror or two holding out, and that maybe there'll be some guilty verdicts, maybe there'll be also some not guilty verdicts together. But I think we got a ways to go.
Greg Valliere of AGF Investments, the former president, faces 34 counts of falsifying business records. The White House says Sunday's Israeli strike on an encampment in Rafah that left dozens dead was devastating, but did not cross the red line. National Security spokesman John Kirby says the White House is working with Israeli authorities to determine exactly what happened.
We have been, I think, very strident in our condemnations about the deaths of innocent civilians. These deaths are not excused from that, but we have to understand what happened here.
Israeli Prime Minister Benjamin Netanyahu described the strike as a tragic mistake. South Africans have begun voting in an election seen as their country's most important in 30 years, and one that could put their young democracy in unknown territory. At stake today is the 3-decade dominance of the African National Congress Party. It led South Africa out of apartheid's brutal white minority rule in 1994, but is now the target of a new generation of discontent. UN Development Specialist Gary Conille has been named Haiti's new prime minister nearly a month after a coalition within a fractured transitional council had chosen someone else for the position. The long-awaited move comes as gangs continue to terrorize the capital of Port-au-Prince. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael, you know, we're busting Paul's chops. It was just great to have him here out of the Gabelli School when he started at Bloomberg. And just was really great. But I'll tell you, that research report and that trend of higher yields that he sees in place, that's completely against consensus.
Yeah,
nobody's looking at that.
I don't think so.
That's a lonely call.
Yeah, exactly. So the good folks at Bank of America Merrill Lynch are out there, and Paul's leading the way. Technical analysis on rates. I didn't even know that was a thing, but his research report shows.
Oh no, way back.
Very cool. Yeah, very cool.
It's very, very cool. It's dense. We protect the copyright of all of our guests. Get Paul Ciana's work from Bank of America. We're on YouTube right now. Search Bloomberg Podcast, subscribe to Bloomberg Podcast. Thrilled with that effort. From New York City, Bloomberg's Surveillance.
Headlines and breaking news 24 hours a day on Bloomberg Radio, television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by BNY Mellon's Insight. 3 days of countless opportunities to expand your knowledge and put your practice at the forefront of the wealth management industry. June 4th through 6th in Nashville. Visit insight.bnymellon.com. All right, to the markets we go, where futures pointing to a lower open. We have NASDAQ futures down 0.7%. Dow and S&P futures down about 0.6%. To the bond market, the 2-year yield 4.96%. That's down 1 basis point. And the yield on the 10-year 4.57%. That's up 1 basis point. Quick check of commodities. We have spot gold lower, $2,343 an ounce. Brent crude $84 a barrel. WTI crude $80 a barrel. Shares of American Airlines, they're lower before the bell. They're down about 8%. The company cut its profit guidance, also announced that its chief commercial officer is leaving. That's pushing United shares down. They're down more than 1%, and Delta down more than 2%. And to retail, well, shares of Dick's Sporting Goods, well, they're higher. They're up 7%. The company raised its outlook for the year, reported sales that surpassed estimates. And finally, Advance Auto up 3%. It widened its net sales forecast for the full year. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. We've got a lot of equity talk coming up here. James K. Glassman, Dow 36,000, joins us in the 9 o'clock hour, followed by one S. Stovall. That will be good to say the least. Terry Weissman with us as well. I'm in awe. I mean, you know, when you lose audio on YouTube,
oh, that's not good.
And like 282 people are going mental in the building here about it. And thank you, all of you, for your patience here. As we unfortunately had an audio issue here going into the show today. And it's all these engineering interns, you know, these guys that took thermodynamics and, you know, differential equations. Thank God for Amanda Lynam of Villanova, who hit the pause button in the control room and said, there, that should do it. I mean, I had that once happen where, you know, it's like one little button in the studio and boom, it's on. Thank you, Amanda, for getting our audio back. Joining us from BlackRock, Amanda Lynam right now. We just had Paul Ciana from Bank of America. And it's in the zeitgeist, it's non-consensus, but with nominal GDP where it is, with the spirit of Atlanta GDP now, what if rates go higher? How does BlackRock and how do you, Amanda Lynam, frame out a 2-year at 5.05, 5.10?
Sure. Good morning, and thank you, first of all, for having me. I think, Tom, what you're raising is the reason why we think that there's not really a sense of urgency for the Fed to normalize policy, and even when they do, it's likely to be a shallow cutting cycle. So for corporate credit, that means we shouldn't be banking on significant near-term interest rate relief. I think the tail risk that we're watching, and the longer that rate cuts get delayed, I think lends more credence to this possibility, is that of a rate hike. And a rate hike would not be negative for credit because of the incremental 25 or 50 basis points mathematically. It would be more negative for credit because of the uncertainty that it would interject related to the forward path of monetary policy. That's not a great backdrop for credit. That's not a great backdrop for deal making, specifically kind of sponsor-related M&A. And so that's what we're watching for. It's not our base case, but it's a concern, and that's really the risk.
Sponsor-related M&A is when the kid asks you if they can go to the 3rd lacrosse camp this summer. That's what sponsor-related means.
So, Amanda, I can sit here at a 2-year treasury like a lot of investors here and get close to 5%. That's not a bad trade. Or should I take some credit risk, do you think?
So we like taking credit risk and floating rate exposure.
Okay.
Leverage loans, for example, up around 3.5% year to date, outperforming high yield up around 1.5% total return.
Okay.
IG is lagging because of the duration exposure. I think importantly, if you're deploying money in corporate credit, you need to be deploying for income and yield, not for total return. We shouldn't be banking on a significant rally in rates to really kind of juice those total returns, nor should we be banking on material spread compression because spreads are already quite tight. So really the conversations that we're having in capital deployment and corporate credit is really about locking in those yields.
I'm going to get you in trouble. It's confusing, folks. There's BlackRock, there's Blackstone, there's BlackRock, which is the building CBS is in over, I think it's on 6th Avenue. Amanda, I'm going to get you in trouble here. If we get a rate regime higher, what does that do to private equity and private credit valuations? my math doesn't work.
Yeah. So somewhat counterintuitively, Tom, against this backdrop of high for longer, we've seen covenant defaults in one of the private credit indices that we track decline for 4 consecutive quarters, which is a bit of a counterintuitive result. It speaks to the flexibility that is inherent in this long-term lender-borrower relationship. I think the point you're raising is also applicable in the public markets. And for a given company with a given business model and a given macro backdrop of, say, higher for even longer, they're probably afforded more flexibility in the private markets relative to the liquid. However, I do think that when you're thinking about sponsor-related M&A, so again, not strategic companies buying other companies, but more LBO activity, financing is a major component of that equation.
Right.
And so it would likely keep that sort of activity muted.
Out on Twitter yesterday, there's a guy, I'm sorry I don't have his name in front of me, he's absolutely fabulous. I read everything he does. He breaks down all these property deals that go bust. And there's a deal that went bust, I can't remember the geography, it doesn't matter, where they took the mezzanine financing and equitized it. That's what I see coming here with a higher rate regime, is somebody puts a shotgun to somebody's head and says all of a sudden it's equity.
And I think with respect to commercial real estate, the trend that we've seen over the past 18 months has been extending. I think we've underestimated the ability and the willingness of lenders to work with their borrowers. And so, for example, Real Capital Analytics estimates there was more than $200 billion of CRE debt that was supposed to mature in 2023 that did not. So it was pushed to 2024. So now that 2024 maturity wall is not $600 billion, it's around $800 billion. If we have the environment where you interject uncertainty related to monetary policy, I think, but there may be a limit to that. I think, Tom, is the kind of the tail risk in a higher for longer rate environment, where importantly there's uncertainty, so that expectations in that price discovery process can't get met between the buyer and the seller.
Amanda, you're head of macro credit research at BlackRock. How do you think about private credit? Because that's been a business that's just exploded in the last 10, 15 years on Wall Street.
Yeah, we actually have a pretty constructive view on private credit. We're expecting it to grow at around a 15% compound annual growth rate over the next 5 years. That's actually below the 20% compound annual growth rate of the past 5. But we think it's actually a positive from the perspective of several years ago, if we were having this conversation, a company may have decided between issuing a high yield bond and a leveraged loan in the syndicated market. Now there's this third and viable option. Importantly, we also see scope for this to grow beyond corporate lending to asset-based lending. So as banks become more selective with their lending, we see actually an opportunity for private credit to step in there. So we have a pretty constructive view on it.
Are you worried at all about the maybe lack of regulatory oversight of that market? Because it doesn't seem like it's not an SEC type thing.
There is actually a fair amount of oversight in terms of how these companies operate business. I think the one stat, actually, if I had to pick one that gives me comfort, it's that and this is using data from Preqin, new entrants in private credit have raised 2.5% of capital on average since 2022. So it's showing that actually the market's being discerning in where it's allocating capital. It's valuing expertise, experience, governance.
We're running out of time, but a big question, and particularly into the Apple meeting, is big tech finally going to grow up and issue debt?
Well, we've seen the capital markets in IG wide open, books 4 times oversubscribed.
No, stop! They make one phone call to BlackRock.
So, I mean, I think if I'm a corporate treasurer or CFO, especially if I'm in a cash-rich position, I think I would be prudently issuing in the first half of this year. There's a fair amount of event risk heading into the second half, where I think it behooves treasurers to take some chips off the table. Specifically, even though the risk-free rate is elevated, spreads are tight, the tone is good, and I think they should probably think about taking that window.
We got through this without asking her about Bitcoin.
Yeah, exactly. Good for her.
That's good. Amanda Lynam, this was brilliant. Thank you so much. She's with BlackRock.
Yep.
This is what it's about, Paul. Paul Ciana and Amanda Lynam back to back.
Yeah, back to back.
It's great. Thank you to all of you out on YouTube. We had some audio problems today. Thank you to Amanda for hitting the pause button there in the
Fixing
studio,
everything for us.
helping our global technical director, Ken Filio.
Yeah, he's trying. Ken's trying.
Get this, he did a good job. It's great. Got him out, had his morning tang, and he fixed the audio issues. Good morning on YouTube. We're out on YouTube live chat. Rumor has it Lisa Mateo will be out on live chat. We've scheduled that in. Futures deteriorate, -35. The VIX out of stick, 14.13. Some tension in the market from New York City. Bloomberg surveillance. Stay with us.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red on the screen. NASDAQ futures down 0.7%. Dow and S&P futures down 0.6%. As far as the bond market, the two-year yield 4.96%. That's down 1 basis point. The yield on the 10-year 4.57%, and that's up 1 basis point. We have spot gold lower, $2,345 an ounce. Brent crude $84 a barrel. WTI crude $80 a barrel. We'll head over to Merck because they're looking to replenish its pipeline of treatments. It's agreed to buy drug developer iBiotech for as much as $3 billion. Merck shares down more than 2%. And Chewy, their shares up more than 3%. The company forecasts net sales for the second quarter of $2.84 billion to $2.86 billion. And Tom, Chewy also announced it opened its first 4 vet clinics. There you go. You can take the cherubs.
Big vet bill and kennel fee to the vet clinics at Chewy.
Cha-ching. That is your Bloomberg Business Flash. Tom and Paul.
Everything I deal with, Lisa Mateo, every single thing I deal with, nothing is easier to give money to than Chewy. It is the absolute.
You just click a button.
Amazon should buy them. Just learn how you can do 3 clicks and get the Hills barley, the Hills chicken.
Yep.
They get Fez. Fez is like a Chewy pheasant.
Okay.
Very big in the house.
Oh,
They're in one in every room. Chewy, do they make? Has that been a good stock?
Chewy, right now they're up about 3%. So
yeah,
nice.
It's just you see their boxes everywhere.
Everywhere. It's the
it's
like
great.
Amazon for
they
pets.
They
take
eat better
my
than
money,
you do.
They take my money better than anyone except Afterthought. Lisa Mateo there with the stock report this morning. Speaking of stocks, we shift after Paul Ciana and Amanda Lynam, but we take a breath of fresh air here at Dow 38,000. James K. Glassman with us here later with Nadia Lovell, Senior U.S. Equity Strategist with UBS. Nadia, thank you so much for joining. A lot of people now are extrapolating out a trend, and I guess the responsible trend on equities is 7%. How do you extrapolate out 3 years out, 5 years out, a decade out in equities?
A lot will depend on the valuation. We know that longer term, valuation matters, just same as earnings growth matters. We have valuations that are elevated right now with the market trading, anywhere between 20 times forward P to 21 times forward P. Longer term, that trend is more like 16, 17 times. I mean, if you sort of think about longer term that you can get an S&P growth somewhere, 8 to 9%. Given where valuations are right now today, it would suggest that you should expect lower returns going forward, probably something in the mid-single digit range. But, a lot could change. We have increased spending on things that could cause a secular change, whether that be AI, infrastructure, or electrification spending that could ultimately lead to increased productivity and overall a regime shift in terms of equity growth.
Hey, Nadia, I mean, for this market for the longest time, technology has been the sector that's really led this market higher. Can we still count on tech to be that market leader here? How do you guys think about that?
I think you can. We do think that you can. We came out of the earnings season with increased conviction in tech and really the AI story. When you think about what we heard throughout the earnings season, we're seeing a real surge in spending. We had the hyperscalers, those large cloud platform companies, boost their CapEx for this year. The top 4 are expected to spend over $200 billion on CapEx this year. When you think about that, that's like the market cap of like a Disney or a McDonald's. And most of that is going to be spent on AI computing. I mean, who stands to benefit from that right now in tech? It's more skewers to semis, and also any sort of companies that are involved in the infrastructure build out. Over time, we do think that will expand to other companies as well as applications where we're still in the early innings of that.
Nadia, I'm seeing blue chip, big mutual funds, ETFs. They're supposed to make 9% per year. Then they're supposed to make 12% per year. And some of them are making 14% per year back 10 years. What does that do to your terminal value analysis? Do you extend out your analysis just because things are so damn elevated?
I think you do have to take a longer term view. I mean, we try to do that in terms of our wealth management clients who are managing for wealth preservation over the longer term. And so it is also important to make sure that you are well diversified while we do still have conviction in tech over the longer term. We also want to make sure we have a healthy amount of exposure in other areas of the market, whether that be fixed income or private equity or hedge fund and the likes, to be able to really get that longer term increase in returns. But I think that you have to have a longer term view. This year, I mean, we do think that you're going to have a good market, but who knows what next year holds, particularly when we have an election cycle.
Wait. Did you just hear a strategist say, who knows what next year's hold? Nadia, what is the Nadia level call in the next 12 months?
I mean, we think this year that the S&P can get to 5,500, all of that being really driven by earnings growth. I mean, we're looking for 11% earnings growth for this year. Next year, there's a bit of uncertainty. I mean, right now we've penciled in 6% EPS growth. Market can get to a bit higher from here over the next year. But again, given the uncertainty around the election and policy uncertainty, whether it be corporate tax reform. I mean, there is a budget that needs to be funded if you want to extend those tax cuts. It's probably going to take, $4 or so $1 billion to do that. So it's going to imply that taxes could be going higher, and that will have implications for corporations.
Hey, Nadia, over there at Global Wealth Management, UBS, of which, full disclosure, I'm a client of UBS. How do you guys think about alternative investments for your private wealth folks?
We think about it in terms of want to make sure that you have exposure to hedge funds that can be able to navigate the different areas of the market and through the cycle, because again, managing for longer term, that's important. You also want to think about those firms that have exposure to secular trends, whether that be like a lot of private equity right now is also investing in the build out of data centers that are geared towards AI, they build out of electrification. So even within alternative investments, you want to make sure that you're diversified.
So Nadia, on the fixed income space, I look at my 2-year treasury, darn near 5%. That seems like a pretty nice trade to me. Would you suggest maybe I take some credit risk and maybe go out beyond my 2-year U.S. Treasury?
We have been advising extended duration. We do think that the yield on the 10-year will continue to move lower. Historically, that's been the case once the Fed starts to cut, which we do think that they will start in September for 2 rate cuts this year. We're looking for the yield on the 10-year to move towards 3.85 by the end of the year, and then, a year out from now, 3.5%. And so you want to start to lock in those yields because that 5% in the 2 years is probably not here to stay for much longer.
Nadia, thank you so much. Nadia Lovell with us with UBS. Greatly appreciated this morning. She's so candid and so honest about we're in this bull market. There's some exuberance, I guess. I mean, we're seeing it. Now we've got yields up, futures negative 32. But the bottom line, Paul, is how do you extrapolate out your belief? I mean, I think that's our task into the end of the year, frankly.
Yeah.
I mean, Ed Yardeni's belief, he makes a lot of headlines, but Paul, his belief is 7% per year.
Yeah.
I did the math on it. It's not a stupid 12, 14% per year. It's a measured extrapolation.
No, and as you say, Tom, it's the courage to be in the market. Folks like Gina Martin Adams have been telling us to be invested, to be in the market, to be diversified, and boy.
Like you say, take the yield.
Yep.
I mean, what's
wrong with that?
you can readjust on a 1 year, 2 year out. Right now, that 2 year yield, 4.96%. That's elevated in the last hour. We'll see if we get a 5% there. 10 year, not as much, 4.56%. We got the VIX out of stick, 14.02. You think a correction in order? Are we on correction watch?
Oh, I don't know exactly.
We'll have to see. With our news in New York City, Michael Bell.
Thank you very much, Tom, Paul, Lisa. The Donald Trump hush money trial is headed to the jury. Deliberations are set to begin today on the 34 felony counts against the former president. Greg Valliere, chief U.S. policy strategist at AGF Investment, says it could be some time before the jury returns a verdict, and Trump could play into that.
I think it also would reinforce his really expert ability to play the martyr. I think he's going to continue to say that this is an unfair witch hunt. I think that he runs the risk still of violating the gag order. You know, if he violated that and had to serve a day or two in jail, I have a hunch, being a contrarian, that Trump would love it. It would boost his support among his base.
Greg Vallier of AGF Investments. The White House condemns the loss of life in Israel's weekend strike in Rafah that killed dozens of Palestinians, but says that this point, for now, there will be no change in U.S. policy. White House spokesman John Kirby was adamant that Israel still has not crossed the president's red line because what we are witnessing is not a full-scale ground invasion.
Israel, of course, has a right to go after Hamas. And we understand that this strike did kill 2 senior Hamas terrorists.
Spokesman John Kirby reiterated that the U.S. is telling Israel it must take every precaution possible to do more to protect innocent lives. A top aide to President Volodymyr Zelensky says Russian forces are trying to seize as much Ukrainian territory as possible in an effort to force Kyiv's allies to agree to a freeze in fighting before weapons deliveries fill a crucial gap. The European Union is considering letting Ukraine strike targets inside Russia with weapons sent by member states. Kremlin forces have been exploiting their advantage in weaponry and manpower as they opened a new front with an incursion into the northeastern Kharkiv region this month. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Paul, I think we got to do a collective thank you to Michael Barr and particularly David Gura for the coverage of the Trump trial downtown, because I haven't focused on it. I just haven't. I can't, like, my brain power just can't get there. And David's doing just a great job in the big take, trying to actually explain what's going on.
David Gura is knocking it out of the park.
Yeah, so
covering this.
He's down at Center Street today, I believe, David Gura
There's
reporting.
4 ways. I read this carefully. Who am I going to give credit to? I'm sorry, maybe the Journal. I can't remember. But there's 4 verdicts. There's guilty, not guilty, and then there's sort of kind of like guilty and sort of kind of like not guilty. That's my expert analysis. But Gura knows the minutia of this cold.
Well, the hung jury part is what could likely happen in some of these counts.
Well, a mistrial is a feasible outcome, right?
Right. That could happen in some of these counts. Now, the prosecution could then retry those counts all over again. If the particular ones. Now, we got 34 counts, so it's no telling what's going to happen. And the jury instructions today are critical, because I want to see how the judge sets up the jury with this.
This is where Gura comes in and you come in, Michael Barr. The instructions are on each charge, right?
Right.
And it's not like sit up straight, get your lunch. This isn't Henry Fonda. Let's go. It's not it.
Yeah. This is really critical about the instructions.
So do we think they'll begin deliberating today?
Yeah, they'll probably deliberate, starting late this morning.
Okay, all right.
So
yeah, it's going to be interesting. But Michael Barr and David Gura, thank you so much. Look for David Gura, the big take for a lot of coverage of these political events across the nation. Paul, the heart of the matter today walking in is a higher yield regime. It's been the first time in ages. First thing I looked at, the 10-year real yield right now exactly 2.22%.
Okay.
For that to lift another leg up would be huge news.
Yeah, it would be huge news and not welcome news, arguably, for a lot of folks out there. Looking at the 10-year Treasury here, 4.56%. The 2-year still 4.96%. So you got 40 basis point inversion on your 2s and 10s. It's been that way for the longest time. And as Cam Harvey from Duke University posited in the paper, that means a recession pretty much every time that's happened, but we haven't seen it this time.
High for the day. We didn't get up to 4.98%, 4.97 in noise on the 2-year yield. We're not there right now, 4.96. 2.2. On economics, finance, investments, Seth Carpenter with us later. James K. Glassman on Dow 72,000. We'll do that later on in the show. We're on YouTube. Subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling this morning. NASDAQ futures down 0.6%. Same for Dow futures right now. S&P futures down about 0.5%. The bond market, the 2-year yield 4.96%, down 1 basis point. The yield on the 10-year 4.57%, and that's up 1 basis point. We have spot gold lower at $2,343 an ounce. Brent crude $84 a barrel. WTI crude $80 a barrel. Few companies making news. We'll start with News Corp. The Associated Press reporting that it struck a multi-year deal to share news content with OpenAI. That'll be for training purposes and, yes, to answer questions from users. News Corp shares down 0.5%. And Cathie Wood bought a stake in Elon Musk's xAI. It represents 2% of the holdings in ARK Venture Fund. And finally, Chinese EV maker BYD. It's unveiled a hybrid powertrain that can drive nonstop for more than 1,250 miles without recharging or refueling. It'll be launched in 2 sedans that cost just under $14,000. That is your Bloomberg Business Flash. Tom and Paul.
Fortunately, this is radio. And even on YouTube, we're going to keep it to radio and not show images because we're a family network. Yeah, we're going to do the newspapers here in a bit. But, Paul, I'm sorry. The story in the New York Post today of one Dan Ives of Wedbush Securities. I mean, a major play in the New York Post. I thought it was something, they wouldn't give that much airtime to ScarJo.
No, and I thought it was about his stock-picking prowess or his calls on the tech.
He lifted Apple up to a higher buy? No, had nothing to do with it.
It's about his wardrobe, Tom, and we've seen it firsthand, for better or worse. He comes in here with an extraordinary palette of colors on his
palette.
wardrobe.
It's a veritable palette.
I'm trying to be
covers.
generous here,
being generous.
Exactly.
He's the only analyst I know who's made more money on his sneakers than on Nvidia.
Exactly. So good for Dan.
But it's a great article. When he's in here, we'll have to
fun.
Massively bust his chops.
Oh,
but the set of pictures, including one photo by Anne-Marie Horton.
Really?
Yeah, they brought in some photos from Dan Ives' Real World to explain to the greater public that he doesn't dress like you or me.
It's disturbing sometimes.
It is disturbing.
It gets attention.
It is. It's clearly un-American.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages brought to you by Interactive Brokers. Interactive Brokers, they charge dollar margin loan rates from 5.83% to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. And and good advice. No one at Interactive Brokers dresses like Dan Ives. Lisa, what do you got?
How did I miss the Dan Ives story? That's what I want to know.
You can't miss it once you see it.
Yeah. All right. Well, we're going to start with the Wall Street Journal. This is about companies' 401k match. They're saying that it doesn't provide a secure retirement for all Americans, so not everyone is the same. It's a study by Vanguard. It says that perk mainly benefits high earners, so it shows nearly half of $200 billion companies contribute to workers' 401k. It goes to that top 20%, and the lowest earning workers get 6% of the money. So researchers are saying that new formulas for company matches, they really need to be curated to kind of ensure that better benefit for everybody.
I skimmed the article. I take immense issue with it. And Peter Orszag is expert on this. Orszag, when he was at Brookings, invented this. The reason it's so skewed is the fancy people put more money into their 401k, so they get more of a match. And yes, there should be, if we agree that the retirement program is a disaster, which I feel strongly, we have to come up with legislation to allow people that don't have disposable income to get a bigger 401k and to get some form of match. But I just thought the article piled on the haves who have the cash flow to put aside and take advantage of the match.
And Social Security, you can't depend upon Social Security.
It's becoming a new worry. Yeah. I had the privilege once of talking to Alan Greenspan about this, and I believe it was 1986 was the last time they really walked through it. And all this is going to come to an head, Lisa. It's really, really, really serious. It's really front and center. It's something Paul and I are devoted to, folks. We're going to try to do more in retirement planning here going forward, because it's a train wreck.
Yeah.
It's tough out there. What else?
And that article really gets into the
Yeah.
meat and potatoes of it. Okay, orange juice prices, we know they're soaring, right? So the Financial Times...
I didn't know that.
Yes,
They are?
yes.
Okay.
Because you have a problem. You have bad weather, diseases in Brazil, and that's like the world's largest exporter. And then you had the crop problems in Florida, too, on top of it. So that's why those orange juice prices are soaring. But the Financial Times is saying that it's pushing manufacturers to think of alternative fruits. So what do you think about mandarin juice?
Sure.
See?
I like a mandarin.
I like a
Yeah,
mandarin,
and there's
too.
like a mixture thing. I'm
Pineapple.
fascinated by this. Where
Yeah.
you grew up, what kind of orange juice did you have?
Tropicana.
Yes.
You had a Tropicana in a paper
was
thing,
the
right?
one.
Yeah, from Florida.
Yes.
I grew up where it was un-American if orange juice wasn't a lump like a hockey puck
Oh, in the
of
freezer?
frozen in the freezer.
Yes.
And your mother would go say, go make the orange juice, and she'd put it in, and then you'd stir it around hoping it would defrost
Yep.
over 6 hours. And then there's other people, if it's not in a bottle, they won't drink it. What is this about? But I don't buy much orange juice. It's gotten expensive. Is that-
I don't either, but because there's just so much sugar content in it. But it's happening.
All right, so what do you...
Water.
Just water?
And a vitamin C pill.
No, you eat
When she invites
fresh
us over,
fruit.
Tom, we're not going to her house for like
But
the
no, but
cookout.
fresh fruit is what you eat, except it's expensive.
Yes, but the fresh fruit, you have to make sure to keep the pulp in it so you get the fiber too.
No, I'm
you don't
like a
keep-
minimum pulp person.
You have to get the pulp in there.
No,
Wait,
I'm not
are
a
you saying
pulp
eat
person.
the
Are you a
orange
pulp
skin?
person?
Are you eat the orange skin?
No.
You gotta do the pulp. It's where the fiber is.
Oh,
Come on, Paul.
No.
All right, let's
right,
turn
give us-
to the Olympics.
Yes.
Oh, let's turn to something healthy.
Yes, we'll go to French fries, okay? So the New York
Freedom fries.
Times is saying French fries will not be on the menu for the athletes of the games in France. Now, it has nothing to do with the health reasons because they're fried or anything. It has to do with the environment. So this is at the Olympic Village, which is the dining hall. They serve about 45,000 meals. They're going to 24/7. The chefs say that the French fries are too risky because of fire hazard concerns over those deep fat fryers, okay? They're
McDonald's does
also
it just fine.
they're also not serving foie gras because of concerns of animal well-being and avocados on top of it. You cannot get those things
Why
on the
can't you
menu
get avocados?
because they're imported from a great distance and also they consume a lot of water. So that's why you can't get. What you can have French cheeses. You can
Yeah,
have
that's good.
veal in like a light sauce, not a heavy,
not bad.
buttery,
I'll be down with that.
Okay, and baguettes, yes. But there's going to be over 500 meals.
But no
That'll be
frites,
it.
okay.
But yes, no French fries. You cannot have them at the Olympics.
I saw a TV 24. I actually watched the whole YouTube video of will they swim in the River Seine? And the guy, Mr. Environmentalist, he said right now he wouldn't swim in the Seine.
Yeah.
But the opening
Yeah, I don't
games,
know if I would.
I believe I read the opening games are not going to be a huge arena. It's going to be along the river,
Okay.
like a boat
For the opening?
thing.
Okay.
Yeah,
Opening
Okay,
ceremony.
which is very cool.
Awesome. I mean, this has a potential to be just an extraordinary Olympics with the backdrop of Paris.
you and me, Hotel d'Aubusson, Rue
Yep.
Dauphine,
Sure.
by the shores.
Yep.
Bring Francine along to help us,
With the
order a
translate.
baguette.
Yes.
Yeah, baguette.
It's like a no-brainer. I mean, it was destined to happen. You know. What else do you have there?
Lastly,
Run ahead.
Chipotle. I always thought that they piled on the
You're
portions.
hitting all the nutrition
Okay.
today.
Yes, exactly.
But actually, there's a lot of people who are posting to social media. They're filming the workers who
I
are
saw
dishing out the
that.
food, and they're saying that they're skimping out on the protein portions. They're giving smaller amounts of the steak and the chicken.
Yeah.
And so now they're posting these videos to kind of give pressure to Chipotle to say, hey,
my
beef it
Chipotle
up.
on 3rd Avenue, they always do a good job.
Yeah.
They do
There's
a
one
good
in my town. They pile it on.
Oh, they do. I know that one. That's a
Can
good
I,
one. Yeah.
can I give you the
I don't
best
know.
chicken in Paris?
Yes.
Le Coq-au-Fil. It's
Ooh.
up by Montmartre. Little tiny restaurant. You sit at the table with other people that you don't know. And it's like real rotisserie. And the secret is they use big birds. The secret, and they
Not Big Bird. but
no,
Big
not
Bird.
big,
Big
bird,
birds.
but they use a bigger chicken than most people.
A bigger chicken.
You got to get a reservation like 3 weeks ahead.
Well, that's
Really
no
worked hard.
good.
And they
phone
serve
call
French fries.
They
and for
do.
dessert, they have Chipotle.
Yes. Win-win.
So I see a theme
Lisa
here today with
Mateo,
Lisa with her food,
thank you.
going through the menu.
Thank you for the
All through it.
newspapers today.
Yep.
How about one of the greatest? I was pumping gas when this song was big.
Yep.
44 cents a gallon.
Wow.
I think it
Yep.
was.
Yep.
The OJ's Love Train. Good morning, everyone.
Train keep on riding, riding on through. Well, world don't need no money. Come on, start a love train. Don't need no tickets. Come on, join, ride this train, y'all. Come on.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance with Lisa Mateo, Michael Barr as well. A shift to the market. Finally, some real action here with the VIX, an 11 print at 12 level. out to 14, up a stick right now, 14.00. Yield is the story. Paul, you have been saying it correctly. I have 4.97% on the 2-year yield.
And Tom, WTI crude oil, we're now back above 80. So I'm not sure what's going on, the whole demand supply thing. We'll get some folks, and I'll talk to Alex
Paul
Steele
Ciana
later.
earlier saying his linkage of yield is to global growth and commodities.
Yep, exactly right.
He's channeling Francisco Blanche there. It was a frightening thing.
Very good.
To see. Well, we say good morning. We're going to get to this quickly. We've got an important guest here to synthesize where we are at right now. We're on Apple CarPlay, Android, on YouTube. Thank you out on YouTube. We had some audio issues earlier. Amanda Lynam of BlackRock fixed that. And thank you to all of you on YouTube for a little bit of audio challenges. Subscribe to Bloomberg Podcasts. Search Bloomberg Podcasts, and you'll get us on YouTube with a live chat. Elisa Mateo threatening to be on the live chat here in a bit. From the Interactive Broker Studios.
You got it. Futures pointing to that lower open after resilient consumer confidence data and hawkish Fed speak. It fueled those expectations that interest rates will be higher for longer. Right now we have NASDAQ futures down 0.6%, Dow and S&P futures down about 0.5%. To the bond market, the 2-year yield 4.96%. That's down 1 basis point. The yield on the 10-year 4.57%, and that's up 1 basis point. Another major deal in oil. ConocoPhillips has agreed to buy Marathon Oil. It's an all-stock deal valuing the company at about $17 billion. Marathon Oil, they're up 7% right now. Shares of ConocoPhillips down 3%. And the news comes after Hess shareholders. They approved a deal for the company to be bought by Chevron. Now that agreement being challenged by ExxonMobil. And finally, it could be the end to a $49 billion pursuit by the world's biggest mining company. We're talking about Anglo American. Says it won't give BHP Group any more time to commit to a takeover offer. Anglo American ADRs are down nearly 2%. BHP Group up more than 1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Bloomberg Surveillance this morning brought to you by BNY Mellon's Insight, SITE, Insight, more than 100 dynamic sessions and countless opportunities to expand your knowledge, your network, and your growth. June 4 through 6 in Nashville next week. Register at insight.bnymellon.com. And joining you in Nashville will be Alex Steele and someone carrying her 7 Audrey Hepburn suitcases.
Exactly. We're going to be down there.
Have you ever seen what Alex travels with?
I know.
It's like Audrey Hepburn in Charade.
Exactly.
It's like she's got the hat box.
Yep.
And, the fancy bag. She's got it all.
Yeah.
Joining us right now, really important, Terry Weissman with Macquarie, to synthesize all this together. What is the character of this lift in yields versus the last 3 times yields have moved up?
Well, let me tell you, first of all, I'm surprised they haven't moved up already, or hadn't moved up already. We got as high as 4.75 on the 10-year. I think it was for just a nanosecond back in April. And then yields fell again. And I think they fell because we got a string of poor U.S. data. But we don't really believe that the U.S. economy is not doing well. We think it's doing pretty good. And on top of this, you also had on May 1st, Jay Powell come out with a very dovish presser. We didn't think that was valid either. We thought that when you heard his lieutenants and the regional bank presidents at the Fed speak subsequent to May 1st, that they were going to be hawkish. And I think we're starting to see the effect of that now. We've had a pretty hawkish Fed speak for the last 3 weeks. We're going into a quiet period, yes. We've had poorer U.S. data, but no one is willing to concede that this is the start of a soft period in U.S. activity. And I think the combination of that, of course, with commodity prices being higher is what's driving the yields higher. Should the 10-year yield stay here? No, I don't think so. I think it has room to rise. I think a much fairer 10-year yield in view of what nominal GDP is tracking at, maybe somewhere around 5%, should be closer to 5%.
Really? Wow, because some folks, we'll have somebody in that seat in half an hour, that'll come in and say a year from now yields are going to be lower.
Yeah. Look, if their view is that there's going to be a recession in the U.S., then I would applaud what they're saying, right? Certainly under a recession, and certainly if it's an aggregate demand-led recession, where the consumer finally comes up against the wall because he has too much debt and businesses lose confidence in tax policy or the administration, and somehow China just loses its grip, and U.S. exports and the external sector here suffer and commodity prices go back down, sure, yields can come back down. But that's not our baseline view. it doesn't seem to us valid, especially when we're starting to see a pickup in PMIs and other survey-based data suggesting that there's stabilization, not just in the U.S., but really more in the rest of the world, that we're on the verge of a recessionary conditions in the U.S.
Macquarie, the view from Melbourne is simple. It is a Pacific Rim view, an Australian view. Is a Pacific Rim recovery in place? Is the IMF lifts the China call up to 5% this morning?
Look, I haven't even seen the IMF call this morning.
They lifted from 4.x% up to 5%.
Yeah, and I guess all they're saying here is that they think that the various policies that have come out of China, especially the so-called TARP-like policy that's come in recently to support the property sector, is going to have some traction and some effect. Is there a validity to that? Absolutely there is. We know that this is for the most part a command economy. We know that fiscal policy and credit policy matter in China, and the historical experience has proven that when they try to boost the economy, it happens to work, including the market. So yes, there is certain validity to that.
This is so important. This goes back to your iconic work at Bear Stearns. They're the same as we are. They have to clear the market in a Hayekian way, whether it's by policy or whatever. China is going to clear the market because politically they have to. It's that simple, right?
I think it is that simple. I think they face social unrest if they don't. We have high unemployment, especially for the younger people in China. There has to be job creation in China, and the basis for that is more consumer spending.
First day we're in Shanghai, we are interviewing Friedrich Hayek.
Yep.
It's going to happen.
Put it down there. Hey, Terry, I mean, Macquarie, for our listeners and our viewers that don't know Macquarie, it is a leading investment bank based in Australia. You guys have a view of that part of the world. How do you think about that part of the world? There's a lot of investors here in the U.S. that say China's uninvestable, but everything else there looks great. How do you guys think about it? You're closer than anybody.
Look, I am close to the situation, but I do follow it from a China-centric perspective. Sitting here in the U.S., I do think that China is relevant for what happens in Australia through the commodity conduit. I think it's relevant for what happens in Japan because of the nexus of exports and imports between the two countries. It's by extension matters for Korea. So I do see everything from a China perspective, and I will tell you that if commodity prices do sustain the rally that we've seen recently, the Australian dollar will do well. The Australian economy will generally do well. We're going to see. We're going to see.
Was that one of your kids this early in the morning?
No,
that was finally up.
That was my alarm telling me I had to show up at Bloomberg Radio. It just happened to be a little late. No, I do see everything from a China-centric perspective, and I do believe that if China does well, you're going to see Australia do well, and if China does not do well, you're going to see Australia suffer. I think there's just too much importance for China in the region right now.
Explain to us what's happening in Japan. For 25 years, you couldn't pay somebody to talk about Japan. Now you got Warren Buffett. You got every other global strategist saying we need to focus on Japan. What changed?
I think the fact that everyone realized that it's cheap is the first thing. The second thing is that people are looking for an alternative in Asia to China, right, to some extent, right? So this is, if China were still booming and everyone had confidence in the Chinese story and that we were going to exceed 5%, I don't think there'd be that much attention paid to Japan's rate of growth, the prospect for profitability. Okay, so that's the one thing. The other thing, of course, is that from a stock market perspective, and certainly from the perspective of exporters in the export industrial complex in Japan, the fact that we have a very cheap yen now is important for profit margins. It may not be important for importers, it hurts them, but when you think about the Japanese stock market, you think about the profit margins of the large industrial groups, and they do export a lot. So you have the combination of things making people finally redirect their attention to
and
Japan.
Tourism tangible as well. One final question. We're into the quiet period on the Fed. We're framing out hawkish tendencies. Is anybody at the Eccles building enjoying a hawkish tendency? That's a new song. Ellie Goulding's bringing that out. Hawkish tendencies. Are we hawkish at the Fed?
I think we are. At least we're leading in that direction. And I want to make a case here for and making this distinction between short-term hawkishness and long-term hawkishness, right? I think the guys at the Fed who are, Tom's smiling, wondering why.
I'm waiting for somebody from England to call in. No, on the medium-term hawkishness.
I think. What do I mean by this? I think that in the short term, we actually might get in the next few months inflation come down in the U.S. It's going to be driven by rent inflation coming down. We know from leading indicators of rent inflation that there's going to be some suppression of rents. But I also think that if you ask the hawks at the Fed why they're hawkish, they're going to say it has much more to do with long-term structural issues in the global economy. Deglobalization, decarbonization, climate change itself, global conflict, the demographic transition away from youthful labor supply in the developed markets and in the emerging markets. I think that all those things paint an inflationary story for the next 10 years, and that means it's going to be difficult to get to that last mile, or at least even if you do get to 2% inflation, it may be difficult to sustain there. I think those guys want to raise the long-run policy rate.
Dr. Weissman, thank you so much. Thierry Weissman, he is with Macquarie. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The jurors in former President Donald Trump's hush money trial in New York City are on the cusp of deciding this historic case. They're expected to have it by late morning. Trump faces 34 counts of falsifying business records to cover up a conspiracy to corrupt the 2016 election. Greg Valliere, chief U.S. policy strategist at AGF Investments, was asked what a conviction could mean for Trump's campaign for president.
We're in such uncharted waters and obviously unprecedented, so it's hard to make an accurate prediction. I would say that if he is found guilty, he'll appeal, and he's great at appealing, delaying. So I think he would appeal, and an appeal would go well into 2025. Could he serve as president with an appeal? Yeah, I think he could.
Greg Valliere of AGF Investments. As for the makeup of the jury, there are 5 women and 7 men. There's a teacher, a speech therapist, a couple of lawyers, and bankers. They're all going to follow the instructions given by the judge, and that should take about an hour or so, and then they will begin to deliberate. It's going to take a while in Dallas County, Texas, for utility restoration crews to get service back to hundreds of thousands of homes after heavy winds knocked out power throughout the state. Dallas County Judge Clay Jenkins urged everyone to be patient as the power company is prioritizing restoration for critical infrastructure like hospitals and police stations.
This is not a generation problem like we sometimes have when it's cold or in the heat of the summer. This is a broken lines problem brought about by straight line winds.
Outage tracking website poweroutage.us shows more than 1 million customers throughout Texas without power. Finally, Major League Baseball is rewriting its record books. The decision acknowledges the achievements of players from the Negro Leagues, which began playing more than 100 years ago. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
One of my pet peeves, the hockey season goes too long. It's 80 degrees out, and you're going to get 2 out of 3 magnificent games at Madison Square Garden. Yeah. It's going to be, Rich, is it going to be June-ish?
Yeah.
Like, there's going to be a game like June 1, June 2, right?
Yeah, absolutely.
Yeah.
I mean, just playing
what are they thinking? I just totally don't get why they think they're going to get the marginal outside player to see the Rangers and the Panthers go at it. Michael Barr, the season's too long, period.
I've got one sound effect. Cha-ching. That's what it's all about.
I just, Paul, it's exciting here. I mean, the Panthers came back 3 overtime in a row. It's like, really, it's hockey. It's cool. It's the Rangers, and they're all out in Central Park.
Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are lower this morning. We have NASDAQ, Dow, and S&P futures all down 0.5%. Over to the bond market, the 2-year yield 4.96%, down 1 basis point. The yield on the 10-year 4.57%, and that's down up 1 basis point. Spot gold lower, 2,341 an ounce. We have Brent crude $84 a barrel, WTI crude $80 a barrel. Today, the Fed releases its Beige Book Economic Survey. Tomorrow, we're on to initial jobless claims, GDP, and wholesale inventories. But yes, all eyes on Friday with April's PCE price index. We'll head to shares of American Airlines. They're lowered before the bell, down about 8%. The company cut its profit guidance, also announced its chief commercial officer was leaving. That's pushing shares of other airlines lower, like United, down more than 2%. Delta, down more than 2% as well. And to retail, where shares of Dick's Sporting Goods, they are higher. They're up 7%. The company raised its outlook for the year, reported sales that surpassed estimates. And Abercrombie & Fitch, they're up about 1% right now. Blew past estimates in the first quarter, also raised its year outlook. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. We're going to digress here right now, and it is into the election season and all that we have. And it is into a taut 239-page book. It is Cheaper, Faster, Better: How We'll Win the Climate War, by a guy who's never mailed it in, Tom Steyer. He grew up advantaged on the Upper East Side. You went to Yale and you could have been a flunky, and you weren't. You absolutely nailed it in economics. Where did, everybody knows you had the drive in investment capital, Goldman Sachs, Morgan Stanley, blah, blah, blah. Where did you get the drive the first day at Yale University to not be another spoiled brat?
Excellent.
Where did that come from?
Well, I guess you never met my mom. It's so funny.
Blame it on the mom, right?
Well, I give her an enormous amount of credit because she's one of the most down-to-earth people I've met in my whole life.
Okay.
She was, she ran school volunteer programs all over New York
She
City.
worked at the House of Detention, is that right?
She worked at the Brooklyn House. She rode her bike all over the city. She accepted herself, and that meant she could accept everybody else in society, from the fanciest to the least fancy, and look at them in the eyes and equal. And that's how I was brought up, and that's what I believe.
The last chapter of Cheaper, Faster, Better is the heart of the matter. You're widely perceived as a Democrat with Mondale and all of your work over the years, but you have to speak to a doubting America on climate change. When the conservatives read this book, what do you want them to get out of it?
What I want them to think is that this is a potential American success story, one that we are going to win, but we're going to win it together. The book is called Cheaper, Faster, Better: How We'll Win the Climate War, which means we're going to win it in the marketplace. We're going to win it with the cheapest, best products in the world, and that's actually how we're going to solve this crisis, but also how we're going to have another American century, how we're going to come together as a people. We shouldn't be divided on this. We should be together on this.
When Paul and I are in London, climate change, green, you're steeped in it, particularly in the continent of Europe as well. Is the reason America's behind is some Lockean individualistic ethos from 1820, or for that matter, 1720?
Well, let me say this, Tom. There is a lot of talk in the U.S., but let's look at what's actually happening in the U.S. In one of the states where the talk is strongest against the sort of clean tech revolution, which would be Texas, they've tripled their solar in the last 3 years, and it's going to go up another 35% this year.
I saw this week, Paul, an article, Texas is the most green state right now.
Exactly my point. So they can talk and talk and talk, but my point is we win in the marketplace. Texas produces by far the most wind energy of any state, by far. Why are they doing it? To be nice, to be woke? I think they're doing it because it's cheap and it's a good deal. And that's my point is, for whatever reason people do it, we need to come together on this and win. It's important for us economically. It's important for us as a people. And by the way, look at what's happening in Texas. Look at what's happening in the southern United States right now in terms of storms, in terms of a heat dome, in terms of people dying. That's what's actually going on, and the people in Texas know it. And the question is, why don't we accept each other, accept each other's motives? We're good people across this country. We share an awful lot. We're all patriotic. Why don't we go and win together in the way that the United States is built to do?
You take a look at, I think if you talk to the average person on the street, one of the things they think about when they think about clean energy would be electric vehicles.
Yeah.
And we had a nice initial surge, and we have this great Tesla success story, which is phenomenal. But what we've seen over the last year and a half, 2 years is kind of the pulling back a little bit from the auto industry. It seems like maybe the first adopters for EVs, they're already satiated. Where's the demand going to be? That's been a concern. And now I read an article in the journal about maybe this whole EV thing's becoming politicized. The people that believe in climate change versus the people that don't believe in climate change. How do you bring those two together?
Paul, let me just tell you a story. So probably 7 years ago, one of my very best friends in the world, who I would describe as a business Republican, somebody who believes that the economy drives success, that business drives the economy, that, a traditional, moderate conservative, but a really smart guy. He bought a Tesla, and he's a car guy. He's from California. When I met him at 18, he took me out in his car and took it up to 100 miles an hour to show me how fast it could go. He bought a Tesla 7 years ago. I said, Matthew, are you out to save the world here? And he's like, absolutely not. This car goes 0 to 60 so fast you can't believe it. It handles better than the European sports car. I love this car. So in fact, cheaper, faster, better. Americans are going to buy the cars that they enjoy, the ride they believe in. And whether that's going to be, they had a bad first quarter. I think a lot of it has to do with the product offering, whether they're new products. Where everybody's talking about the $13,000 BYD car that goes 1,200 miles. Now, it's a plug-in hybrid, but my point is this is going to be product-driven. It's going to be people buying a ride.
Should we ban Chinese EVs if they're so far ahead of us in delivering a $12,000 vehicle? Should President Biden's second term, you'll probably be in the cabinet, should he let the Chinese EVs into the country?
Look, I'm going to give you the argument, then I'm going to give my answer, if that's okay, Tom. Look, China is the country that emits by far the most, but they're doing everything they can to win industrially in terms of, the clean energy. They're trying to do all the solar panels, all the EVs, and they're basically, dumping into the United States. And the question is, when people offer you really good products, really cheap, should you allow them in? Hurts jobs, helps. By the way, you guys keep talking about inflation. Oh my God, the bond market. What do you think was keeping inflation down all these years? It was cheap products from overseas forcing prices down.
Fair.
So when I look at that, I go, okay, environmentally good, consumer-based good, inflation-based good, but it goes after American jobs. We have to win in the marketplace on our own.
Okay, one time for one more question. Fairlawn Capital 2025. There's a 40-page memo in front of Steyer, and it says, why don't we have EV charging stations on the Upper East Side? What a scandal that we can't build zillions of charging stations. Whose fault is it?
Look, as far as I'm concerned, if people will pay for charging stations will get built. The U.S. has gotten... Look, we have not been great about infrastructure, period, Tom.
Fair.
If you look about how are we doing in terms of buildings, physical things in this world, we're kind of caught up in our underpants. And I think that in this case, this is a question where we have to respond as a society. And I think from a central place, we have to say the perfect is the enemy of the good here. We need to win here. We need to solve this crisis. And we need top-down saying we got to cut through the red tape. And that's true, in virtually every part of this country.
Cheaper, faster, better. Tom Steyer here with a primal scream about the view forward on climate change. Paul, from the mail I get, hugely controversial.
Sure,
across the
absolutely.
country.
I know.
Still is.
Yep, absolutely.
I mean, there's no question about that. What's also controversial is yields off. Mr. Steyer, he's a bond strategist as well, was talking about that today. At 4.96% in the 2-year, the 10-year elevated as well. 30-year bond I haven't quoted since Steyer's last book, 4.68%. Futures at negative 32, and the VIX up a stick, 13.97. We have a large amount, Paul, of economic data. We have underplayed it. It's been my fault, and I'm sorry. We've got a huge amount of data coming up here.
Sure.
Today's a little quiet, and then boom.
Yeah. We got PCE deflator kind of at the end of the week, which we know our Federal Reserve is going to pay close attention to.
We will see. Please stay with us. Seth Carpenter to join many other worthies is well. Anna Wong with us. James K. Glassman on Dow. 72,000. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have NASDAQ, Dow, and S&P futures all down 0.6% this morning. Over to the bond market, the two-year yield 4.95%. That's down 2 basis points. The yield on the 10-year 4.56%, and that's up 1 basis point. Few companies making news. That's Merck. It's looking to replenish its pipeline of treatments. It's agreed to buy drug developer iBiotech for as much as $3 billion. Merck shares down more than 0.5%. Advance Auto widened its net sales forecast for the full year, but shares are lower this morning. They're down about 2%. And finally, Chewy shares, they're really soaring now. They're up 13%. Reported first quarter net sales came in ahead of expectations. And here's the thing, the company announced a $500 million share repurchase program as well. That is your Bloomberg Business Flash. Tom and Paul.
It's a future Dow Jones Industrial Average stock.
Exactly.
You know, it's like, it's sick how much I give Chewy. Good morning, Vet Bill. Kennel Fee as well. They listen every day on YouTube. They subscribe to Bloomberg Podcasts. And sometimes Kennel Fee searches for Bloomberg. Are you healthy over there? What are you eating right now?
It is oatmeal with protein
Captain
powder,
Crunch, people. It's Captain
chia
Crunch.
seeds, and fresh berries. Cheers.
I'm going to outlive her, I guarantee it.
Good morning, everyone. Michael Barr, Lisa Mateo, Paul Sweeney, and Tom Keene. Of course, our economic indicator, it is that time, 8:30. And we thank Commonwealth. Economic Indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Joining us right now with global perspective from Morgan Stanley, it is the debris that Steve Roach left behind, is Seth Carpenter. And a few days ago, there was a sort of nexus of the Morgan Stanley view, Paul, of the Pacific Rim around Robert Feldman in Tokyo, Matt Hornbach, who went over there. He was there just after Shogun.
Okay.
Matt Hornbach and Seth Carpenter writing about Japan. And I said, we've got to get Seth Carpenter on.
We have a lot of economists more.
Just Seth, from when I said get Dr. Carpenter on, we have Japan finally with higher yields. And within the trilemma of fix it with currency, fix it with yield, fix it with this, fix it with that, finally yields give way in Japan. Is this a sign of where they're finally going to fix their massive problems?
I do think so. It's good to be on, Tom. Thanks for having me. I was in Tokyo last week for our summit, the Morgan Stanley Summit, and the buzz there was palpable. I'd say just over a year and a half ago, when our Japan team started forecasting a structural shift in the Japanese economy, that the inflation that everybody sort of felt because of COVID and commodity price and everything, that we thought that was going to actually kickstart this structural shift towards reflation in Japan. People were skeptical. I have to say now, most of the skepticism, maybe not 100%, but most of the skepticism is falling away. We do think we've had this watershed moment, a surge in inflation that's now getting broader and broader and broader. We saw spring wage negotiations lead to some of the highest wage inflation in a while, and we think we're getting into that virtuous circle, getting Japan out of this 25-year rut.
You downplay the Morgan Stanley trump card, which is when Robbie Feldman of MIT on the watch, and folks, I'm not going to mince words, he's the most respected, he's like Shogun, he's the most respected English speaker in Japan. What does Robbie Feldman say about an efficacious solution to their monetary dilemma?
If I downplayed Robbie Feldman at all, I want to apologize to you and everyone listening. Robbie is a gem. He is clearly one of the greatest assets. And I think part of what makes him as respected, as you pointed out, is not that he's an English speaker there, that he's a perfect Japanese speaker as well. He's lived there for a long time, and he's a well-known figure on Japanese television because of his flawless Japanese. No, Robbie's critical to our view here. Robbie would say not only is our inflation story the right one, look more broadly. The corporate reforms that are going on by the Kishida government are likely to help reinforce this ability for the rally to keep going. When I talk to clients about Japan, the question is no longer should we be all in, it's do we need to hedge against the currency or not.
So what do you make of this currency here, Seth? I mean, we saw the yen versus the dollar hit 160 several weeks ago. We're here at 157 here. How do you think the Bank of Japan thinks about their currency?
So I think there's lots of trickiness here, and I will separate out the market, the Bank of Japan, and the Ministry of Finance, the MOF, because I think each one has a slightly different perspective here. My general view on central bankers, having worked at the Fed for 15 years, having spoken to folks at the BOJ, I would say that they are thinking about where the yen is now more in change terms. Are we seeing a big move consistently, or what? Whereas the market and the Ministry of Finance are thinking more about the level, the fact that we're at 157 but have been at 160. For the Bank of Japan, I don't think they're looking at it being the biggest driver right now of their inflation. If we went back a year as the yen was selling off, then you were seeing import prices going up really dramatically. Now import prices are still going up in yen terms, but it's much less. And so the level has mostly stabilized. The BOJ would care if you got big fluctuations that were huge moves in very short order, I think. The MOF, though, and I think markets are very focused on the level of where we are now. And the market, one of the questions I get from clients is, will the MOF have to intervene again? How effective will it be? Will the BOJ be dragged into that fight? The house you hear at Morgan Stanley is inflation in the U.S. is coming down. The Fed's going to still end up cutting rates probably by more than the market thinks. And if that turns out to be the case, that pressure on the yen will go away, and you may actually see some appreciation in the yen over the course of the year.
So, Seth, when you talk to your institutional investor clients, how do you kind of frame out the issue of American exceptionalism from an economic perspective? Is that a thing from your perspective? Can we really think about the American economy as performing materially better than the rest of the world? And how common is that?
I do believe you can think about it that way, and there are lots of factors that are contributing here. One factor that is global, at least for developed market economies, is some increase in immigration. But the numbers here in the U.S. are really big. What we've penciled in terms of the labor market sort of contribution from immigration is going from a break-even rate on non-farm payrolls of about 100 to 110,000. That is, how many jobs can the economy create without needing to shift the unemployment rate? We've gone from our estimate a year ago of about 100 to 110 to probably something closer to 250. So it's just a really, really, really big addition to the labor supply of the U.S. economy. Add that to the continued sort of support from the fiscal packages over the past couple of years that are still flowing into the economy. And you've got the recipe for lots of growth, and yet still inflation coming off of its peak and continuing to come down.
Should we get Seth Carpenter in trouble?
Yeah, let's
okay,
do that.
Let's do that. Seth Carpenter with Parchment from Princeton. There's this professor who he had a tour of duty at the Eccles Building, and he's basically telling the Bank of England what to do. Ben Bernanke is out front saying, look, forecasting has to change. The Bank of England has to change. Do we need to get a subcontract for the Red Sox fan? Does Ben Bernanke need to tell the Fed what to do on how to forecast?
So Ben Bernanke, not only was he at Princeton while I was there, he was actually my principal dissertation advisor. So I hold him in the highest possible esteem. He's got a point. There's an old saying that's alternately attributed to Yogi Berra and to Niels Bohr, the Nobel physicist. And if both of them said it, it's got to be true. Forecasting is hard, especially about the future. And anyone who gets stuck in a set of ways of doing things and doesn't sort of realize how much the economy is changing, realize how much this cycle has been different than ones in the past, you're going to have some challenges. And so I think shining a light on the process and asking how can we do better is always the right thing to do.
Did you take the course with Blinder and Berra? Was that were you in the? I mean, Yogi Berra did undergraduate at Princeton for years, like Ec-10 at
Harvard. First year graduate school, Alan Blinder was my professor. He is the reason I'm a macroeconomist.
It's his fault. Yep. Okay. Thank you.
Exactly.
Good morning, Professor Blinder. It's your fault. Seth Carpenter, thank you so much, particularly the comments on The Economist. Why Berra as well. Futures deteriorate, -39. Dow futures, -259. with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The criminal trial of former President Donald Trump is at a major turning point. By lunchtime, the case will likely be in the hands of the jury, who will decide if Trump is guilty of dozens of felony charges. Yesterday was a marathon of closing arguments from both the defense and prosecuting attorneys. Criminal defense attorney and lecturer in law at Columbia Law School, Caroline Polisi, breaks down what's next for the jury.
They now get to talk with each other. That's part of the system, discussing and picking each other's brains. It's going to be fascinating. I wish we could be flies on the walls in that deliberation room. No one will ever know.
Criminal defense attorney Caroline Polisi. Trump faces 34 felony counts of falsifying business records. The White House says an Israeli strike on an encampment in Rafah that left dozens dead was devastating, but it did not cross the red line. Bloomberg's Ed Baxter reports.
The administration says the president has no intention of freezing additional arms shipments. NSC spokesman John Kirby says it was not the large-scale attack the U.S. had warned against.
We have been, I think, very strident in our condemnations about the deaths of innocent civilians. These deaths are not excused from that. But we have to understand what happened here.
Israel, in fact, says its small arms airdrop could not have caused the explosion that killed dozens. It says it had to have been Hamas-stored munitions. Ed Baxter, Bloomberg Radio.
President Joe Biden and Vice President Kamala Harris head to the battleground state of Pennsylvania as they step up their re-election pitch to black voters. They'll launch a new summer-long black voter outreach effort with a visit today to Girard College, an independent boarding school in Philadelphia with a predominantly black student body. They will also stop by a small business to visit with members of the Black Chamber of Commerce. Biden has seen his solid support among black voters showing signs of erosion. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, I think we've underplayed the economic data coming up. You dive into tomorrow, and on the ECO Go screen, there's 19 or 20 lines of data. It's like ginormous.
It's a ginormous. We've got, GDP.
A second
tomorrow.
look
Yep,
at
exactly.
GDP. And it's 1.6%. down to a lower call of 1.3%.
Exactly. And so that'll be interesting to pay attention to. Initial jobless claims as well tomorrow. Then, of course, Friday, Tom, that PCE deflator here, I'm just looking at on a month-to-month basis, 0.3%. And for those of us that like to annualize this kind of stuff on a year-to-year basis, 2.7%. That's close to 2% where the Fed would like to see it, but it's not there yet. So that kind of goes to that whole sticky thing going on there. You got
I wouldn't underplay personal income and spending because, for example, in personal income, personal spending, I should say, we had a ginormous 0.8% statistic last time, and now it's going to come down to a more responsible 0.3. Says who?
Yeah, says who? Exactly right. So again, we hear out there in the economy from economists that there's just kind of at least two economies out there, and the folks that own assets, real assets, whether stocks, bonds, real estate, doing fine. Those that don't, perhaps that are living paycheck to paycheck, more.
Well, we saw that yesterday.
More exposed to inflation.
In the confidence numbers, the lower decile was shocking. It was pandemic lows of struggle out there. We know so many of you are struggling out there as well. That it seems to be a bifurcated America, to say the least. What we have is a data check that's livelier than it's been in weeks. Forget about the tech juggernaut. We got the VIX at 12, as the VIX is now 14.11. Futures at negative 39, and the yields have simply adjusted, buttressed right up against recent high yields, a 2-year 4.95%, waiting for economic data to see which way that goes. A select few calling for a higher rate regime. Amanda Lynam, one of those with BlackRock today. So it's really, really interesting. Paul Sweeney pointing out Brent crude. If I can find it on the screen here, I'm searching Brent crude.
Sure, we got just under $85 a barrel. How about that?
$85 a barrel from New York City. This is Bloomberg Surveillance.
24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. NASDAQ futures leading the losses this morning, down 0.8%. S&P futures down 0.7%. Dow futures down 0.6%. To the bond market, the yield on the 2-year 4.95%, down 2 basis points. The 10-year yield 4.56%, and that's up 1 basis point. As far as spot gold, lower, 2,342 an ounce. We have Brent crude $84 a barrel, WTI crude $80 a barrel. Companies making news, it's News Corp. The AP reporting it struck a multi-year deal to share news content with OpenAI for training purposes. Also, yes, to answer those questions from users. Shares down about 0.5%. And sticking with AI, Cathie Wood has brought a stake in Elon Musk's xAI. It represents 2% of the holdings in ARK Venture Fund. And finally, to the housing market, Bloomberg reporting U.S. homeowners with adjustable mortgages could face a $1,000 a month jump in their payments. Nearly 1.5 million arms will reset in the coming years. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now, we're very odd, is Odd Lots, fabulous podcast and way eclectic more than me. Tracy Alloway darkens the door this morning with Joseph Weisenthal. Tracy, I gave a speech out in Las Vegas, and I grew up in a house completely removed from gambling or betting or whatever. And I remember the first time I walked on the floor of Caesar's Palace betting, for me it was this wake-up call, and never would I think that floor would become institutionalized across America. You guys are looking at sports betting. I mean, is there anyone not doing it?
It is kind of weird.
Just Tracy.
Yeah, well, I've never made a sports bet. I don't count. Horse racing, I feel like. I don't know.
I guess the difference is horse racing only exists for the betting, whereas like the other ones seem to have some other purpose.
The last time I was in Vegas and I was walking around, you know, if you go past the actual sports betting, like the little arenas where they have those big recliners and all the screens,
Sportsbook.
Those are pretty empty nowadays, because why do that in Vegas when you can make bets from your phone at home on your couch? It's you know, to the institutionalized
What'd you learn
point.
in your interview on this?
We learned that the online sports books, if you're bad and they can detect you're bad, will expand the amount you're allowed to bet. If they detect that you're good, they will shrink the amount you're allowed to bet.
Do they tell you when you're addicted?
No, they don't. And,
I'm sure they send some emails, but who knows?
And they don't let you get an easy look, for the most part, at your total winnings or losses, things like that. So it's fun, and you might make money, but you'll probably lose a lot of money.
And didn't Illinois just this week raise, I don't know, some taxes or something on this thing?
Probably. I missed that story. But
yeah, so anyway,
I'm
so
sure.
the sports books were actually trading down on that thing. But I guess the issue here is, I mean, is sports betting becoming a problem in the U.S.? Is there a concern about that? Is anybody looking at that?
I'm sure there are some people looking at it. Is it becoming a problem? Like, to me, one of the culture shocks of being in the U.S. now is, do you remember you used to see all those ads for pharmaceuticals and medicines on U.S. TV? That doesn't happen anywhere else on Earth, as far as I know. But now you come to the U.S. and you see ads for gambling. And it's people literally saying, we'll give you $500 to get on our platform, and you're going to win a bunch of money.
Does anybody make money?
A small percent do. But then the challenge is they really, like the art of betting. So the science of betting is some people are just really good at identifying mispriced odds. And there are some people...
Like the Boston Red Sox.
Exactly. But then the art element is like, okay, once you establish that you're good, how do you like build up the capacity to keep betting? So do you put in bad bets every once in a while so that the sports book thinks keeps your limits high? Do you trade a lot of accounts?
One of the things we learned is that there are some professional sports bettors who will buy accounts from amateurs. So basically people who have a normal history on a betting platform or are particularly bad at it, you can sell that account to a professional so that they can use it in order to have a reasonably sized book and try to keep winning.
So if I'm a good, successful bettor, these sports books will limit the capital they
Yes.
have?
Yeah, they could shrink your maximum bet size, and they absolutely
don't do that.
What?
They'll kick
they
you
don't.
out if you're counting cards, right? And to me, counting cards was always, you're just playing the game well, right? But the casinos make the rules and they can kick you out.
Twice now in the last 10 days, We've heard that Texas is leading on climate change. And of course, Joe Weisenthal, folks, his internship out of Austin was wind. He was out in the tundra of the Trans-Pecos.
That's
on
right.
the western tip of Texas, out there, doing the wind thing as well. The electricity grid at Texas is a great pinata of America. It's lousy,
right.
it's independent, it's useless. Is climate-type energy coming to the rescue of the lousy Texas grid?
It's so fascinating because ERCOT, the Texas grid, has expanded renewables like crazy. There is a lot of solar on the Texas grid. There is a lot of wind on the Texas grid. What it doesn't have is reliably cheap prices and reliable electricity, particularly in periods of heavy cold snaps or really hot heat. And so we do have this very strange sort of like market structure, and we have an episode out today with fellow Brett Christophers. He's at Uppsala University in Sweden. And then we have another episode out tomorrow. And it's sort of exploring this tension, why there are a lot of technologies out there that seem good, that seem like they could help decarbonize the grid, lower costs. But the market structure of the grid is such that it doesn't end up reducing prices, and you get these sort of inefficiencies, or maybe inefficiencies isn't exactly the right word, but sort of market competition in a way that doesn't actually lead to lower prices or sufficient build out, because we have this sort of hybrid Frankenstein's monster of highly regulated, monopolized grids with attempts to shiv markets into them. It creates all kinds of interesting perverse effects.
And I think one of the other issues that we've seen in the marketplace is just AI in general. People are looking for derivative plays on AI. One of them has been energy.
Oh, yeah.
And I didn't even think about that, but Alex Steele is all over. She's the energy czar, and she's saying that's a story.
Yeah, it's funny. If you listen to a lot of the energy companies' earnings calls for the past quarter, every single one is just about data centers and AI. But it's kind of interesting because it goes back to the renewable energy point, which is, well, maybe some of these big tech players become the big forces in the green energy transition. If they're the ones saying, we need energy, we're going to do it in a renewable way.
Within your work, is renewable energy working for America right now? My answer is it's been a quiet story that nobody knows about.
Well, this goes back to Joe's point, where we have this weird, highly regulated market, but we're relying on private entities to build within it and ideally be profitable, ideally for them in order to encourage investment.
So if Paul gets 6,000 square feet outside Austin, throws 2 wind things on it, he can sell that electricity back to Austin?
And you could do that in Texas, you could do that in California. And the other thing, there's a lot of reasons to be cynical and skeptical. Right. On the other hand, everyone knows the main problem with wind and solar. It's not always, the wind isn't always blowing, it's not always daylight. Right. But batteries continue to grow in both the Texas and California market. And so this idea of intermittent plus firm power. Right. So there are green shoots out there that maybe it's working, but if you really want to see lower prices and stability and an accelerated timeline about the climate imperative, I think it's still questionable.
One of the worst things of a summer gig, if you're light sweet crude. I mean, the arenas are air conditioned.
That's right.
But if you're in a bar in Brooklyn with light sweet crude on an August evening, it gets awful hot, doesn't it?
It does. But you know where it doesn't get hot? The Sphere in Vegas. And there's really good.
You're opening for U2 out at the Sphere?
Not yet, but hopefully. And there's really good Wi-Fi in there, so they have the power. So even though they're out in the middle of the desert,
I think they know their audience. Jim.
Yeah, exactly.
Cardinal rule is in an August gig when you're worried about your amps blowing up because it's so hot.
I need to hear that.
You just play Midnight Train to Georgia.
Okay.
You just go into you do your Gladys, vamp off of it and you do a blues thing, and then you go into Midnight Train to Georgia.
Gonna bear that. Gonna keep this in mind.
It's good. It's
just
if
keep
you
it
don't
grooving.
want. Do you have the little Princeton with the tubes in it, like Chris Stapleton or something? What are you working on amps?
I don't have a good amp. Send me a link to a good amp.
Just send you a link to a good amp?
This will be the 10th time you've probably sent me over our career of working together, but this time I'll actually click the link.
Light Sweet Crew, look for them in your town. They're out touring now, and when it's hot and dusty, they'll play something like Gladys Knight and the Pips.
What's left of his world? The world he left behind not so long ago. He's leaving on that midnight train. Said he's going back to a simpler place and time. Oh, yes, he is.
All right, coming up.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr. Thank you for being with us on Apple CarPlay, Android, on YouTube. Subscribe to YouTube. Bloomberg Podcast. Subscribe to Bloomberg Podcast. Search Bloomberg Podcasts out there. There's a live chat active and all that as well. We say good morning here. It's challenging tape. Futures, negative 40. They've deteriorated lows for the day. Dow futures negative 266. The VIX out 14.1. Some tension in there is well, Paul. Paul, Citigroup just put out this note. It really caught my attention here. Let me get to it here. I'm trying to do three things at once.
Multitasking.
This is Paula Junes over at Citigroup. Abercrombie and Fitch.
Unbelievable.
Exceptional Q1, higher than anticipated fiscal 24 guidance raise. Paul, you didn't mention this at 25. 25 to 152. It looks like a meme stock, but it's not.
The company stock has risen 73% so far this year, compared with 11% gain in the S&P 500. And this is Bloomberg reporting. The company, Tom, continues to cater to the rapidly changing tastes of Gen Z and millennial customers.
We now go to Gen Z and Lisa Mateo talking to us here. Come on, Lisa, help me here.
My kids love Abercrombie.
They love it. It's always more expensive, right?
No, it's not that expensive. Well, it depends if you get a good
It's made
sale
with
day.
pride.
Yeah, I was there Memorial Day, so.
I love this, Lisa. Made with pride, designed to celebrate what makes you, you. I remember when A&F was pith helmets. You know, and I think they invented the cargo shirt. Lisa, what is the magic here at the Mateo household for Abercrombie and Fitch?
I think, it's all, the social media influencers too get in my daughter's head and makes them believe that she needs these Abercrombie and Fitch, shorts for the summer. But it's all about, that's what they are. They're all about the Abercrombie and Fitch, that and American Eagle, like back and forth.
Hollister's, that's one of the brands. Comp store sales up 13%. How about that? Comp store, I mean, that's the consumer, Tom. They're out there, I guess.
A&F Sloan low-rise tailored pant, $90.
Okay.
That has a little bit to do with it.
Okay.
Congratulations. It's a huge turnaround at A&F. And thank you, Paul Ajuz over at Citigroup, for that wisdom as well. Bloomberg Surveillance this morning brought to you by BNY Mellon's Insight. More than 100 dynamic sessions, countless opportunities to expand your knowledge, your network, and your growth. June 4th through June 6th in Nashville. Register at Insight, INSITE. .bnymellon.com, and there'll be sessions with Alex Steele.
Yeah, absolutely.
You mentioned energy. That's a big deal.
She's the boss there.
You're going to carry her suitcases?
Mm-hmm. I'll carry her suitcases, and we'll be good there down in Nashville. We'll go to the Ryman Auditorium, maybe.
With a Bloomberg Business Flash. Lisa Mateo.
You got it. We have futures pointing to or low or open. Thoughts of higher for longer interest rates gaining some strength. And we have NASDAQ futures down 0.9%. Dow futures down 0.6%. S&P futures down 0.7%. Over at the bond market, we have the 2-year yield at 4.95%, down 2 basis points. The yield on the 10-year 4.57%, and that's up 1 basis point. Another major deal in oil. Yes, ConocoPhillips agreed to buy Marathon Oil. It's an all-stock deal valuing the company at about $17 billion. Marathon Oil up 11%. Shares of ConocoPhillips down 0.5%. And this news comes after we heard that Hess shareholders approved that deal for the company to be bought by Chevron. That agreement, though, being challenged by ExxonMobil. And we have a setback for BHP Group. Anglo American saying that it's not going to give the company any more time to commit to a takeover offer. We have Anglo American down nearly 2% over in London. BHP Group up more than 1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Long ago and far away, a very lonely voice had the courage to say, we may see higher rates. And there's been an ebb and a flow in this, and rates are going down and going up and going down. But Anna Wong of Bloomberg Economics was hugely courageous a long time ago to say rates could set higher. We get an update. Dr. Wong, thank you so much for joining us as Chief U.S. Economist with Bloomberg Economics. Is now the time where we break out to a new higher rate regime?
I think the Fed officials' speeches recently has been pretty clear on their answer to that question, which is quite unlikely. And the reason why is you can look at this from various angles, and one of which is to use the inertial Taylor rule. And if you plug in any combination of unemployment rate and core PCE inflation rate into the inertial Taylor rule, in a range of possible outcomes, you would see that most likely than not, the Fed is going to cut this year rather than raise rates further.
So, Anna, for a lot of observers, this inflation outlook, the last, the movement down to closer to 2% has been maybe a little bit more difficult than maybe some people thought. Maybe the inflation's a little bit stickier than some people thought. A, is that correct? And B, why do you think that is, if it is correct?
Yeah, so I think there are currently three main component of inflation that's quite sticky, and one are those that are experiencing catch-up inflation growth, such as car insurance, home insurance, and something that has not yet happened yet, but about to, which is health service inflation. And these kind of inflation is so sticky that even if you get a recession, they're still going to continue to inflate. And the second one is, which the Fed and everyone else is betting on to happen this year, which is the housing rent disinflation. And it's happening, but it's happening very gradually. But this component will be the key driver of disinflation this year. And finally, there's the rest of the services, which would be related to the cyclical part of the economy. So if the labor market were to slow, then that part would slow as well. And so far, all these is happening super, super slowly. And right now, our base case for core PC is for it to get back to 3% at the end of this year.
Futures -42. Anna Wong driving the market lower. Pa, off the SPX high, this is all futures I'm talking. We've corrected. We're down 1.1%.
Yeah, exactly.
It's a plunge.
It's a plunge. So, I don't know. Anna, what do you think the Fed really needs to see here? What do you think for them to cut rates? Do they need to see inflation to materially move lower or just kind of stabilize? What do you think they need to see?
So this Friday, we're going to get April's PCE report. And if it is going to show a core PCE reading of 0.24, then it is they're on track for probably 50 bips of rate cut this year. At least they would have more confidence that the inflation is on that path. So as long as core PCE were to be bumbling around 0.20 or around that vicinity in the next couple of months, I think they will be on track to cut in September.
Dr. Wong, thank you so much. Anna Wong, writing for Bloomberg Economics. It'll be an important thing to read here. Friday, 12 noonish. They publish, she's got to proofread it.
Yeah.
It takes a while. I mean, they don't come out at 8:35.
They got a team, though.
But they get a team, and they get the interns in. And,
Right.
We'll look for literature from Bloomberg Economics about
Do we have interns?
10 a.m. Do they have interns?
Do we have interns?
Yeah, we have interns.
Okay,
They just, they're all in classes and they're all getting smarter. They're all up in the food court. They reach for the Alka-Seltzer. That's all there is to it. Futures, they deteriorate. -42. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Jury deliberations begin today in the Trump hush money trial. The panel will receive instructions from the judge and then get the case by lunchtime. The former president faces 34 felony counts of falsifying business records. The former president still leads President Biden in Bloomberg News Morning Consult swing state polling, even as the trial has gone on. But Henrietta Trey's of Veda Partners sees vulnerabilities for Trump.
Just a few weeks ago, 22% of Indiana voters decided that they wanted Nikki Haley to be the nominee, not Donald Trump. And it was primarily in suburban, white, affluent, married areas. And the disparity between support for Trump and between men and women was about 10 points from men favoring him and seeing more favorable news cycles from him and maybe tuning out the court trial to 10 percentage points more of women seeing some bad news about the former president in the last week.
Henrietta Trey's of Veda Partners was a guest on Bloomberg Surveillance. The White House condemns the loss of life in Israel's weekend strike in Rafah that killed dozens of Palestinians. However, National Security spokesman John Kirby told White House briefing that at this point, there will be no change in U.S. policy.
We understand that this strike did kill 2 senior Hamas terrorists who are directly responsible for attacks against the Israeli people. But, as we've also said many times, Israel must take every precaution possible to do more to protect innocent life.
Meanwhile, the Israeli military says 3 soldiers have been killed in Rafah when a booby trap exploded yesterday. South Africans have begun voting in an election seen as their country's most important in 30 years, and one that could put their young democracy in unknown territory. At stake today is the 3-decade dominance of the African National Congress Party. It led South Africa out of apartheid's brutal white minority rule in 1994, but is now the target of a new generation of discontent. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Pauly.
Fran Horowitz, I mean, that's all there is to it. I'm looking at A&F. It's like a complete disaster for what, 10 years?
Yep.
Moonshot, 10-year track record with a moonshot, 15.3%. 15.3% per year.
Yep.
We go to our sell-side retail correspondent on Abercrombie & Fitch, Lisa Mateo. Lisa, is this because, Lisa Mateo, is the Abercrombie success because of the bestseller high-rise dad short? What's a dad short? I mean, help me. What's a dad short?
Dad jeans they're a little bit higher in the waist.
Oh, are they?
Yes.
Oh, you're just talking about Wednesday at my house.
They have dad jeans, there's mom jeans, there's skinny jeans, there's jeans for everybody.
I mean, we're going to really, Ms. Horowitz, if you're listening, we'd love to have you on here to talk about this. I mean, I can't think of a turnaround ever, Paul.
Yep.
Like ever.
Well, I mean,
ever. It's like a meme stock.
It's like
except it's not.
Exactly right. I mean, I'm looking at this thing. You know, Abercrombie ANF is the symbol there for Abercrombie and Fitch. I mean, it's a $7.8 billion market cap company, Tom. The 1-year return, 408% on this stock over the trailing 12 months, up 72% year to date. So, and it's just an extraordinary story here. But again, some of the competitors like Vans, they had 7 quarters of declining sales. So this is like when you talk to Poonam Goyal or, you know,
we gotta get
Dana
Poonam
Telsley
on.
on. It's you got to be right on the fashion stuff. It's not just inventory and pricing and all that kind of stuff.
Yeah.
You got to be right on the fashion, and I don't know how you do that.
200 million free cash flow pre-pandemic. They cratered down 50%, 100 million free cash flow, and they're now popping 500 million free cash flow, all out of the dad short.
Exactly. Dad shorts. Oh my God, I hope I don't have any dad shorts.
What is the Mateo House?
can't wear
The
cargo.
dad shorts because they got to fit the dad bod.
Yeah,
That's where they
but-
came
really?
from.
What are you looking at?
Lord, don't put a camera on me, please.
So Mr. Mateo does not have cargo shorts, does he?
No cargo shorts.
Good.
No
You
dad.
wouldn't allow that in your
No,
household.
no.
Yeah. See,
Do they still have the line out the door on Fifth Avenue with the hunky boy in the front?
Oh, the big advertisements.
Remember
yeah.
that? I think
yeah,
those days are gone.
They
Fran
got
got
a
rid of
little
that.
trouble for that. Yes.
Yeah, they got rid of that.
What's wrong with cargo pants?
Still in the cargo pants.
Oh, man. Okay.
Oh, gotta hang them up.
New Albany, Ohio. Congratulations to Fran Horowitz and A&F for just flat out getting it done. That's an extraordinary story. Futures at negative 39. The VIX up over a stick, 14.16. From New York City on YouTube, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, they're deteriorating. NASDAQ futures down nearly 1%. Dow futures down about 0.6%, and S&P futures down 0.7%. The two-year yield at 4.95%, down 2 basis points. The yield on the 10-year, 4.58%, and that's up 2 basis points. Over to commodities, spot gold lower, $2,343 an ounce. Brent crude, $84 a barrel. WTI crude, $80 a barrel. Today, the Fed releases its Beige Book economic survey. Tomorrow, we're on to initial jobless claims, GDP, wholesale inventories, and then to end off the week, we have the Fed's preferred inflation gauge. Yes, the PCE index. All right, let's head to shares of American Airlines. Lower before the bell, down 9%. The company cut its profit guidance. Also said that its chief commercial officer was stepping down. That's leading to United shares and Delta shares also lower this morning. And to retail, shares of Dick's Sporting Goods, they're higher this morning after boosting its outlook for the year. And finally, yes, you heard it, Abercrombie & Fitch, which is to me like Chewy is to Tom. It's up 1%. The company also blew past sales estimates and raised its outlook. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. There is confusion that reigns supreme. Within the world of Bloomberg surveillance, there are 3 Robert Kaplans. We always have to be careful. And there are 2 James Glassmans. There is the extinguished James Glassman at J.P. Morgan. Of course, we have him on for Jobs Day. He is definitive on teen employment. And then there's another James Glassman who flat out changed the lexicon and dialogue of stocks in America. There are books along the way as a benchmark from World War II that have become iconic. Clearly, theoretically, Graham, Dodd, and Cottle was the definitive fundamental analysis book. But there was a book a time ago called Dow 36,000 with Kevin Hassett, where James Glassman changed how we think about growth in America. We're thrilled that he could join us this morning. James, let me just get the update to the book that you and Hassett are working on. Are we going to see Dow 72,000?
You know, I actually did a piece for the Wall Street Journal when the Dow crossed 36,000 called Get Ready for Dow 1 Million. It was just saying that in 40 or 50 years, if we keep at this pace, we'll hit 1 million. But we're actually not planning a sequel.
I'm going to cut you major slack because you had a small 3 once-in-a-lifetime events get in the way of your timeline. But Ed Yardeni, who you and I knew from C.J. Lawrence, Ed Yardeni extrapolates out a 6.99 called a 7% trend line on equities. Can you have the confidence to put some form of extrapolation on the stock market?
Well, I think that sounds right. I mean, what has been amazing about the stock market is that for over 100 years, we've seen returns in the 9 to 10% range. And there are very few, if any, periods of 15 years or longer. I think that's the figure where the market has lost money. So, you know, long term, there's nothing better than a long-term investment in the stock market. It's not easy. People get scared and they bail out. But if they put their money away and forget about it, it's been a great investment. And I don't see much in the way of economic change or political change over the next 100 years, although it's kind of just taking a guess. It's going to change that. So I think it's pretty good. It's a pretty good bet.
Hey, Jim, you know, Tom and I were both fans of the Dow Jones Industrial Average. Maybe it's just out of, sentimentality. A lot of folks obviously look at broader indexes. Does the Dow need an update, do you think?
I think so. And, you know, I'm a great admirer of the Dow. As you said, I did a book on it, and I'm very happy to be in the company of Graham and Dodd. But about a year ago for Kiplinger's Personal Finance, I did a kind of an updated version of the Dow. I mean, the Dow's got lots of problems. It's a price-weighted index, but it still has been pretty much tracked the S&P during the time when they both existed. But I said, hey, we need an update. I mean, one of the problems with the Dow is it can't high-priced stocks. You know, you can't. You can't have Tesla in the Dow. You can't have a company like NVR, which I think is a great company, in the Dow. You can't have Chipotle in the Dow. They would really distort it way too much. So I did an asset-weighted index just kind of for fun, which I call Top 30. About a third of the stocks are Dow stocks, and some of them are from the old Wired index, if you remember that one. And then I added some of my own. And so the folks at Kiplinger said, hey, you ought to tell the readers what this has done over the last year. And it actually has done pretty well. I mean, it was up 33% versus 16 for the Dow. I think the Dow has some real problems right now, no doubt about it. And they're almost insoluble. But
with James K. Glassman, we can Segui, and we're going to Segui now. And of course, this is to your public service with the younger George Bush. Years ago, you put out a blistering note with others 4 years ago on your concerns over the Republican candidate for president right now. What should his Republicans in name only, like James K. Glassman, do into November? What is your action plan for Republicans like you disaffected by former President Trump?
Well, I've spent a lot of time on this subject, and really we've come up with essentially nothing but wait. That's what we've done. So to stick to your principles and wait. And some of those principles from an economic point of view are free trade, not protectionism. We're seeing protectionism from both parties, I think in a very alarming way. And I'm not happy with what the Republican Party is doing in foreign policy. I was just on the West Coast and went to the Reagan Library. I used to be the executive director of the Bush Library's Policy Institute, and I'd never been there before. And I was overwhelmed by the optimism and the devotion to free markets that President Reagan had.
Okay, well, Reagan ran to the center.
I just think we got to stick to our guns. That's basically it.
He was clobbered by Ford. He figured out what to do. He ran conservative, and then he ran to the center. Do you have any confidence that President Biden, pleading to progressives, will then be able to run to the center to capture the trophy in November?
I think that President Biden will run to the center. He's done a bunch of things for the left, although some of those are kind of going to be postponed till after the election, like the ban on new LNG export licenses, which I think is terrible. He's done a whole lot of things economically that I think are bad. But yeah, I think he will run to the center, and I think if he wins, he'll govern from the center. And that's what he has to do. I mean, that's where the country is. The country, this is a slightly right of center country. And, what's a real shame for us Republicans is that if we had a candidate who was a normal right of center candidate, that candidate would win by quite a bit. Now, Congress is a separate problem. And I think some real reform is needed in Congress, for example, along the lines of what Alaska has done with Final Five voting, because Congress is not getting anything done at all. And, you could have a great president in there and Congress doing nothing. And, I don't think we need to be governing by presidential decree.
James K. Glassman, thank you so much. Greatly appreciate it. Don't be a stranger. He is, of course, the author with Kevin Hassett years ago of Dow 36,000 with an update there here at Dow 38,852.
Yep.
What a tough game to forecast. And then they ran into, the whole 10-year.
Yeah,
didn't work out. Great financial crisis. This, that, and the other thing.
I don't know where my father's Republican Party is. If Nixon were on the ballot, my father would get up from the dead and vote for him. But I don't know where those Republicans are. I don't think they're there anymore.
It's a huge debate, and to your point, and of course, this is a theme that we're going to have to cover, folks, as we link our politics into what we do here in economics, finance, and in investment. I get zero buzz in the conventions. I believe, Lisa, help me here, there was a headline in the last 24 hours that they're going to nominate President Biden virtually, before the convention.
Oh, I like to see people going crazy in the arena and waving their signs and all that kind of stuff.
Right. I can see Lisa down there. Exactly. We believe.
Representing the great state of New Jersey.
The great state
Thank you.
New York. She'll be wearing her dad shorts from Abercrombie & Fitch.
Exactly.
Futures low of the day, negative 43. This is Bloomberg Surveillance. We need to get the markets open. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how will the markets open? Thoughts of higher for longer interest rates starting to strengthen. Today, central bankers from around the country will outline economic conditions in their districts in the Beige Book. We also have more economic data on tap for tomorrow, but the attention focus on Friday with the PCE index. All right, let's get to the market reaction right now. It's not looking so great. We start with the S&P 500 down about 0.7% at 5,266. The Dow down 0.8% at 38,540. And then finally we have the NASDAQ down 0.8% at 16,879. Over to the bond market, the 2-year yield's 4.95%, down 2 basis points. The yield on the 10-year, 4.58%, and that's up 2 basis points. As far as commodity risk, spot gold lower at $2,345 an ounce. Brent crude, $84 a barrel. WTI crude at $80 a barrel. At the open, we're checking in with Marathon Digital right now. Oil, they're up. Down about 1%, and that's after ConocoPhillips agreed to acquire the company in an all-stock deal. ConocoPhillips, we're checking in with them, and they are down more than 1.5%. That is your Bloomberg opening bell report. Tom and Paul.
NVIDIA was $11.40. It's plunged. It's down $6. It's just, I mean, you could go green in the screen here, Paul.
Oh yeah, just
we're not there yet, but.
No, but I mean, how about a stock there at $2.8 trillion market cap?
Joining us now with perspective is our single best guess with perspective. It goes generations. Sam Stovall joins us, Chief Investment Strategist at CFRA Research. Sam, what an honor to have you on today. Why aren't we having corrections? I remember 10%. We can argue 18 or 20% bear market.
Good question.
Every once in a while, we go down 35%. We're down 1.3% today. We were down, what, Paul, 5% a cup of coffee ago?
Exactly.
Sam Stovall, why don't we correct anymore?
Well, good morning, Tom. Good morning, all. Actually, we do correct. From March 28th through April 19th, we were down a whopping 5.5%. That I call a pullback. And history says we probably are going to experience another decline of 5% or more in the coming couple of months, because the first quarter of this year was the 11th strongest since World War II. And of the top 15, 13 of them experienced declines of 5% or more shortly thereafter. And then if you didn't really reset the dials enough, you ended up with a second decline of 5% or more. And I think that's what we're likely to be experiencing.
If you take out technology and the magnificent whatever, are we in a correction?
Yeah, I think that while AI is driving NVIDIA and tech, EI, and that's earnings and inflation, is driving the rest of the market. And with earnings pretty much on the sidelines as we await the end of June and the second quarter earnings reports, right now it's all about inflation, the PCE report on Friday, the worry about interest rates, and the fact that the Fed will likely be slower to lower interest rates.
Okay. And when Sam does a lecture on this, on AI and EI, they, of course, play Old MacDonald, EI-EIO.
Oh, boy. All right, we'll let that
go. I'm outstanding in my field. What can I say?
Don't leave, Sam. Paul will save the show.
Hey, Sam, I mean, I'm thinking about walking up to my boss later today and saying, I'm taking the rest of the summer off. I don't think anything's going to happen here to maybe the fall when maybe we get the Fed doing something. I mean, it was a good first few months of the year. What do you think investors are going to do over the next several months here? Just kind of wait for this Fed to give us some direction?
Well, history says that the period from Memorial Day through Labor Day has been fairly unexciting. 1.6% is the average gain for the S&P 500, with basically a coin toss in terms of market being up or down in June and in August. July is usually a little bit better, but I would tend to say you still can see some areas that do relatively well. Tech and healthcare have been the two best performing sectors in that Memorial Day through Labor Day period, with biotech and semiconductors way on top.
Yeah.
So, we'll see. But basically, I think investors will be focusing this time around on two things. That is interest rates and also the upcoming election. Remember that July 31 through October 31 has been a very good indicator of who will get elected.
He's a Stovall. He has to go to the election. Down -400, Paul.
So, Sam, I mean, how do you think about valuation in this market here? We've had this big move off of those October levels to date here, and we had some good earnings and probably some better than expected earnings. Is that enough to support this market, or do we have some valuation concerns out there?
Well, I think valuations are sort of holding us back. You know, it's like trying to run a race with a tire chained to our belt. One reason being that the S&P 500 is trading at a 30% premium to its average PE over the last 20 years. Now, there are some groups that are very attractively valued, such as energy as well as financials. They're trading at double-digit discounts to their long-term relative PE ratios. Small caps are at a 30% discount, mid caps at a 25% discount, but I think they're on hold at least until the Fed gives us more clarity as to when they're likely to start cutting rates.
Paul, lifting out, this is what I'm following, folks, more than anything on the Bloomberg Launchpad. The 10-year real yield was 2.22%, and we just had a print of 2.24%. I haven't done the work, Paul, when that's a breakout, but we're right there.
We're right there.
Right there right now.
Hey, Sam, are you surprised that this stock market has done as well as it has in 2024, given that, boy, we started the year in the market discounting maybe 6 rate cuts, and now the market's discounting 1 or 2, so it's gotten a lot less optimistic about the Fed helping us out, yet the market's performed.
Well, it has. I've been surprised by the fact that we have had fewer rate cut expectations than we did at the beginning of the year. But still, I guess it does show that rate cuts themselves are a carrot for the market. Historically, the S&P has risen about 14% in the average 11-month span between the last rate hike and the first rate cut. Small caps have done well, but not as well, up an average of 9.5% since over the last 30 years in this kind of an environment. So I think that investors would like the Fed to give us a little more clarity, but unfortunately, we're going to have to see better earnings growth, but at the same time, a continued decline in the rate of inflation that we expect to see over an extended period before the Fed decides to cut.
Sam, how do you respond to the major stock funds, the big large cap funds, where they've got, their top 10 holdings are 40, 50, dare I say 55% of their holdings? I mean, is there a risk to that? Is there a lack of diversification that's profound?
Well, I think just look at the index itself, and you're looking at a lack of diversification. It's, the top 50% in market cap ends up being 10% of the stocks within the S&P 500. And that has been pretty much the case for decades. And whenever we did see a correction in the cap-weighted 500, usually it's the equal-weight 500 that falls even further. So I think it's just a fact of the marketplace, and it's something we have to deal with. But right now, because we are not expecting a recession, despite the inverted yield curve telling us to look out for the last couple of years, our belief is that investors will continue with the uptrend.
Which sector is edging towards 5 stars, 4 to 5 stars? Where's the dynamic of a constructive sector investment right now, Sam Stovall?
Well, we focus on a 12-month time horizon. Near term, I would tend to say that it's likely to be more defensive in nature because we are in that challenging May through October period. Staples, healthcare, utilities tend to do relatively well. But once we get rid of the uncertainty surrounding the elections and we continue into this bull market, we continue to focus on energy, financials, communication services, and technology because of growth expectations and the fact that rates will eventually start to come down.
Sam Stovall, thank you so much. Sam Stovall with CFRA. I'm doing a standard deviation study, Paul, in Chewy.
I know.
Going back to late April is a solid 5, even 6 standard deviation surge, I say. It's a surge from 15 to 20. I mean, it's a pop.
Exactly. Stock up 19% here today, on some better than expected results here. They got a stock buyback, all that kind of good stuff going on. And, this was a little bit of a pandemic stock in the sense that people during the pandemic, went out and bought pets, got pets, maybe more than the average. And now the question, and of course they needed the Chewy to feed them. Now what do you do in post-pandemic? So that was a little bit of an issue, but boy, had a good first quarter beat, $500 million buyback, and stocks up 19%.
I mean, how can they make money on a multi-pet, empty nester, squeaky, stuffing-free, plush dog toy pheasant?
And what's that go for?
It goes for $8.10. It's on sale.
All I know
Every
is
room should have one.
One of my neighbors is Harry, who is a very angry dog. He's got some anger management issues, but he's a big Harry customer. He's a big Chewy customer. Yeah, the boxes show up there every week religiously.
Is he chewed on a surfboard?
No, but he's just a very angry young puppy, so we'll have to see. I blame it on the parents, but that's just me.
Oh,
yeah.
Don't criticize.
I'm not criticizing the
dogs and children in that order.
Yeah, exactly.
Not that would ever happen at the Barr household. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. The White House says Sunday's Israeli strike on an encampment in Rafah that left dozens dead was devastating, but it did not cross the red line. National Security spokesman John Kirby says the White House is working with Israeli authorities to determine exactly what happened.
We have been, I think, very strident in our condemnations about the deaths of innocent civilians. These deaths are not excused from that. But we have to understand what happened here.
Israeli Prime Minister Benjamin Netanyahu described the strike as a tragic mistake. After more than 6 weeks of proceedings and a marathon day of closing arguments, Donald Trump's hush money case, the first ever criminal trial of a former president, is about to go to the jury. Greg Valliere, chief U.S. policy strategist at AGF Investments, does not expect a speedy verdict.
Everyone has a forecast, and I do too. Mine is that this is going to drag on for quite some time, with maybe a juror or two holding out, and that maybe there'll be some guilty verdicts, maybe there'll be also some not guilty verdicts together. But I think we got a ways to go.
Greg Valliere of AGF Investments, the former president, faces 34 counts of falsifying business records. And finally, speaking of animals, the National Zoo has announced 2 new giant pandas are returning to be on display for free and spied on via PandaCam. By the end of the year, the 2 should be comfortable in a new home and available for zoo visitors. And in a Twitter X video, First Lady Jill Biden.
We can't wait to celebrate this historic moment here in our nation's capital. Join us. It's official. The pandas are coming back to D.C.
The previous panda couple at the National Zoo were sent to China late last year, along with their cub. Global news, 24 hours a day and whatever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Q Pandas.
I've never seen them. Have you ever seen a panda?
No, I'm all in on the PandaCam though, but I have not seen a panda. So we have to go to Washington D.C. now to do that. Okay, all right.
Zoo, yeah.
All right, we'll do a little remote.
There's
maybe.
a great photo of Steve Roach of Morgan Stanley at the height of his coverage of China. He's out in Chengdu. I guess you go out to Chengdu.
Okay.
And there's the mountains to the west of Chengdu, and that's where all the pandas are. So he figured out how to go to Chengdu to do a thing for Morgan Stanley. And he's surrounded by pandas. It's like, they're all hanging out with Steve.
Well,
panda diplomacy. I love it.
I always wonder, if you see the videos of pandas, how do they survive in the wild?
They're not the sharpest.
They have a rarefied diet. I guess the diet is tough. It's bamboo.
Oh.
And, General Chow.
Yeah.
Well, that's good news. Maybe we'll get to Washington and do a remote from the Washington Zoo. Right now, we're doing a remote. Market lifts, negative 400 in the Dow. Now negative 332. SPX down 41 points. Let's see, where are we? The VIX 14.18 is well this morning. Bitcoin, haven't quoted it, 67,000. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks are lower in Wednesday trading. The Nasdaq down 0.7% or 125 points. The Dow down 0.9% or 346 points. And the S&P 500 down 0.7% or 40 points. The 2-year yield at 4.97%, down 1 basis point. The 10-year yield at 4.59%, and that's up 4 basis points. Over to commodities. Spot gold lower at $2,341 an ounce. NYMEX crude $79 a barrel, Brent crude $84 a barrel. Shares of Chewy, they're soaring up 22% right now. We told you, reported first quarter net sales that beat expectations. And then Abercrombie & Fitch up 15%. That blew past sales estimates, raised its outlook to on top of it. But you have American Airlines, they're down nearly 13%, cut its profit guidance. That's the issue there. And finally, Starbucks baristas, they're telling Bloomberg there's a major dilemma. Drink orders coming in faster than workers can handle. They're understaffed. They're saying it's leading to wait times of 30 minutes for a cup of coffee. That is your Bloomberg Business Flash. Tom and Paul.
Yeah, this is a real problem. I'm glad you brought this up. And there's like 3 people in front of you ordering a latte, this and that, and like 40. I just want a cup of black coffee.
Me too.
You guys are going to the wrong spot.
You can't do it.
I just want a cup of black coffee.
How about
That's
the guy on
it.
the corner, the cart? Just go to that guy.
No, it's not. Doesn't taste the same.
Really?
No.
But it's a huge
We have
problem.
27 coffee things up on the 6th floor. That's not enough for you?
I know, but on the weekends, I like to go to my Starbucks, get my coffee.
But it's a huge
It's good
issue
Starbucks
for their, Lauren's like, is this what I came here for?
Yeah, exactly.
This is really cool. And I just want to set this up. There are like 10 Paul degrees, majoring in basketball, Duke. And one of the coolest ancient degrees that we have on the East Coast is ethics, politics, and economics at Yale University.
Who does that?
They did it. They wore the black Puritan thing with the white collar, and they had a wig on and all that. But out of New Haven is the people that can survive, and I mean survive, ethics, politics, and economics. It's one of America's chosen tradition, and I don't know, John Mack or James Gorman said, shut up and hire her. Yeah. And that's how it happened.
Yeah, Lauren Hochfelder joins us here, co-CEO of Morgan Stanley Real Estate Investing. And I was just saying to Lauren right before we started, Tom, when I think real estate on Wall Street, absolutely starts with Morgan Stanley, and I have no idea why. You guys have always
really good question.
been, from an institutional perspective, investing in and around real estate. How did that happen? Why is Morgan Stanley synonymous with real estate investing?
Oh, I love that. So we started the business in the early 90s, actually out of the S&L crisis. So we were one of the first institutional investors in real estate and started when times were tough and have really grown the business over the last 30 plus years.
Yeah, just amazing. And I see your alumni all over the industry kind of doing stuff. We had a guest come in who's raised a fund, Tom, to go out and buy office right now. He says he thinks he sees the bottom. Talk to us about, I make the mistake big time of just saying real estate, oh my God, it's difficult out there. It's crazy because I just think about the empty office buildings. Talk to us about first office, and then we'll go to the other stuff. How bad is office real estate? Am I going to see the lipstick building trade at 30%, 30 cents on the dollar at some point?
Well, look, first of all, I love that you're framing the question as office versus everything else, because I think people tend to conflate the two. So look, office is, and let's be specific, U.S. commodity office, right? Because you can't, it is different on a global basis, it is different by segment. But U.S. commodity office, it's distressed for a reason. You've seen a dramatic demand destruction from work from home. You've seen shifts in preferences, right? Huge CapEx needs, both for tenant preferences, ESG, et cetera. So that is distressed for a reason. And yes, I think a lot of assets are going to trade dramatically off, maybe worse than people
there's
expect.
one kitty corner on your way out the door. You could, after you pick up your merch at the food court, there's a building out here that just went for 70% down. Where are they going to be in 5 years? Where are the Class B, Class C properties, where are they going to be in 5 years?
Well, some of it depends. Some of it will be converted to other uses, so whether residential or other. But then building, we're sitting here in Bloomberg's headquarters, buildings like this that are so high quality where you can get that coffee you were just talking about and enjoy the space, I think those assets will perform.
I'm going to
well.
editorialize here. Mr. Bloomberg just stepped up with our management team for an extended lease here at 731.
Boom, we're not going anywhere.
Glad they did that. I got to ask you the elephant in the room question. If we get the yield lift that Paul Sweeney's been talking about, what does it do to the marketed and leveraged private equity, private debt, real estate structures like Sterling or Blackstone? What's going to happen there?
Well, look, stepping back, I mean, real estate's a levered asset class, so obviously elevated rates keep values down. They make the wall of maturities, that $1 trillion+ wall of maturities we've all been talking about, that much more difficult to refinance. Certainly that much more difficult to refinance at the same proceeds level, which means you'll see more forced selling or more needs for capital. For us, we view that as a real opportunity, right? We have opportunities to buy really high quality assets at significant discounts. By the way, not just from real estate asset owners, but actually from corporates, right? High interest rates don't just affect real estate, they affect corporate borrowers who now need more creative ways to finance themselves. So we're finding opportunities to do sale leasebacks with corporates, high quality real estate, high quality companies. Those are great opportunities.
Where are you guys putting money to work these days?
Yeah. So some sectors we love. We continue to love industrial.
Okay.
And we love
Is that warehouse stuff?
It is warehouses.
Warehouse
yes.
stuff, okay.
It is
Gotcha.
warehouses. And really for three reasons. The first, I heard you all talking about Chewy. So the first is the continued rise in e-commerce. So we've been investing in industrial real estate behind e-commerce for, well more than a decade as, the share of goods online versus in store increases. The second, which is really an earlier stage thing, is the complete overhaul in the global supply chain, right? So the supply chain of the last 20 years will not be the supply chain of the next 20, and that's the U-turn we're doing on globalization. That's the increased event-driven supply shock, so trade disruption in the Middle East, et cetera. Companies are learning the hard way. They can't put all their eggs in one basket. That's good for us because they need more baskets.
Yep.
And the third is just supply is down dramatically. So when you have new starts down 70% plus, demand still
like
strong.
in warehousing, starts are down
Absolutely.
70%.
Yep.
The ancient history that Paul and I know is foreign money to the rescue. Yeah. Like I assume if you're at 100 folks and it's down 30 or 40%, nobody breaks a sweat, and all of a sudden you're down 60 or 70%, but you don't get to where you're supposed to go, like down 75%. Because you just know the foreign money's going to step in. You guys own that. Is the foreign money going to step in?
Well, look, I think when our business started, you had much more narrow sense of where capital was coming for institutional real estate. No question, it is a completely global market today in terms of capital flows, et cetera. But I think the thing that is keeping new supply down is construction costs are up. Interest rates are up. That means cost of capital is up. So regardless of where that capital is coming from, it is just, you're just seeing a higher cost of capital, less new construction. And so today that'll constrain it. Tomorrow you'll see more rent growth, more appreciation.
Real quickly, globally, where do you see the best opportunities globally? I know Morgan Stanley has a global footprint.
We do. So look, we love the U.S. It tends to be for those accounting majors, unlike EP&E, first in, first out, right? Okay. So it corrects the quickest. It tends to recover the sharpest or the quickest, and we're seeing that in the U.S. today. We're very active in Japan.
See, again, Japan. Nobody talked to me about Japan for 25 years, and now
when you drive through the streets of New York City, I'm going to be quick here. When you drive through the streets of New York City and you see all the stores shuttered up, I never thought I'd see this. It's here. How does Mayor Adams and the city work that out till we look some semblance of prosperous?
Yeah. Well, first of all, I'm a New Yorker, so I don't drive through. I walk through.
You walk through, okay.
But
you're on your little scooter. Yeah. Okay. What do we do?
Yeah. So look, first of all, I think you're seeing some rebound in retail sales. So it really depends where. And I think you're starting to see some of these retailers do very well. It depends on the neighborhood.
Got to run. Lauren Hochfelder, thank you so much. With Morgan Stanley on real estate. Don't be a stranger. 1972, it resurrected his career. Hey, we played the OJs. We played Gladys Knight. Elvis.